What's happening, everybody? It's your boy Creative. We are back at it again. Go ahead, say it with me to create something great. Today, what we're going to be doing is creating another algo trading bot. I haven't decided if it's going to be QQQ or Spy, or maybe we'll pick up NVIDIA. I haven't really decided on the asset yet, but what I do know what we're going to do is create a new one. And you all are going to see us go from the actual idea to back testing, and then maybe if we do have time to actually create the algorithmic trading bot. So I'm going to be using Cursor, and within Cursor, I'm going to be using Claude Code. In addition to that, I'm going to be using ChatGPT to help us flesh a couple of things out. So if you all do have any questions while we're doing this, please let me know. Again, I'm creative. I've been coding since April of this year. So I haven't been coding that long, right? About 6 or 7 months, depending on how you count it, right? But when it comes to finance, when it comes to options, when it comes to being able to understand the underlying stock market, right? Like this is something that I know. So I wanted a way to be able to marry the two. So that's when I found algo trading. But we only don't do algo trading here, right? We recently dropped a video on creating an AI agent. We also do machine learning. So whenever it comes a cool coding project that I want to share with you all, this is the space that I'm going to do it. So today is going to be an algo project. And I know I said I was going to create a disclaimer, but I haven't yet. This is not financial advice. This is merely educational advice. If you do seek financial advice, please go to either a financial advisor, a certified financial planner, or those that are licensed in order to assist you. All right, let's go ahead and get this thing rolling. So, for about the first 10 or 15 minutes of every stream, I like to call it office hours, right? Now, it may go a little bit over depending on how much we need to cover. Now, today, I just want to be able to make sure, and I'm not making any assumptions, right? So I'm going to assume that you all don't know what an option is. I'm going to assume that you don't know how to code, right? So we can go through this process, and I'm going to explain it as thoroughly as I can so you all can see my process on how I go from the idea, then take the idea and being able to flesh that out with ChatGPT, and then also being able to backtest that idea. So y'all are going to see all of this. Um, so I think let's just go ahead and jump in, and then let's talk about what is an option contract, right? Let me do this. Let me do this. All right, perfect. Let me go ahead and zoom that in a little bit more just to make sure you can see. Let me drop that down because you don't need to see that. All right. So an option contract, right? An option contract is a ticket that gives you the right, but not the obligation, the right to either buy or sell a stock at a specific price before a certain date. You don't own the stock yet, right? You just own the choice to buy or sell it later if you want, right? So let's break a couple of things down here, right? uh, a stock to, excuse me, an obligation to buy or sell a stock at a specific price. When we see that specific price, that just means our strike price, right? So let me change the color so that can be a little bit more pronounced. Don't worry, we're going to get to all of that. All right, hold on. And then strike. No, I just want that one to be purple. Follow me. Oh man, you're not following me. All right, hold on. I'm just having a bit of technical difficulties. Let me see if it does that. Change it. Okay, didn't want that. Just follow me, bruh. Just follow me. Strike. There we go. Strike price. Right. So that obligation, that specific price is our strike price, right? And a strike price is what we're betting to see. Excuse me, a strike price is what we expect the underlying option contract to be at, right? Whether it's high or low. We're going to get there a little bit soon. So let's just keep breaking this down. So specific price is a strike price, right? A certain date is our expiration date, right? So let's go ahead and put expiration date. Expiration date. Data. That's funny. So a certain date is our expiration date. So option contract is like a ticket that gives you the right, not the obligation, to buy or sell a stock at a specific price, right? That specific price is our strike price, and before a certain date, and that date is our expiration date, right? We don't own the stock yet. This just gives us the choice to either buy or sell it later if we want, right? A little bit more simple analogy. So imagine you have a concert ticket, right, for $100. Even if the ticket's resale jump to 300, you still get to use your $100 ticket or sell it to someone else for a profit, right? That's just like the option contract. The ticket equals the option. The concert date equals the option expiration date. The ticket price equals the option premium. And then the concert seat equals the stock, the asset you can buy or sell later, right? An option isn't ownership, right? It's control. You're paying for the right to choose what to do later based on what the market moves, right? And remember, there's 100 shares in one option contract, right? So I want us to be able just to truly, all right, let's go UM. Again, I normally don't stream. I ain't gonna hold you. There's been a couple of times I've streamed during games. So I'm going to be watching the University of Miami football game, right, while I'm streaming. So this is not going to take away from the coding that we're doing. This is not going to take away from the project or anything like that. But if I do make a little note as to like, all right, what's going on, what I'm looking at, it's the football game. Well, I'm not gonna hold you. So all right, let's keep going. So there's two main type of options that we're going to be buying here, and that is a call option. And again, if you want me to, let me just zoom in a little bit more so I can make sure you see. All right. We have a call option, right? Our call option, this is our right to buy the stock at a set price. Remember when we see that set price, that's our strike price. You think that the market might go up, right? So a call option equals bullish. Now, what does a bull have? Horns, right? And what do the horns point to? They point up. So when you're bullish, you have horns, they point up. So you think that the market or the price might go up. That's weird. Miami normally doesn't take the ball to start the possession, but I'll take it. All right, I love it. We're at the 42, 41. First little game on the road here. Our second game because we play Florida State on the road. So second game versus SMU on the road. So this is gonna be a good one. This is gonna be a good one. Nice little test to see how we stack up. All right. So again, oh, what was I saying? So a bullish, right? Bulls have horns. What does those horns do? They point up, right? So if you're bullish on the market, you think that the price of the market might go up, right? So generally, when a stock price goes up, the call options go up, right? Not all the time, but generally, when a stock price goes up, the call options go up. So let's talk about the second, and that's a put option. Right. So a put option is the right to sell a stock at a set price because we think that the market might go down. So a put option, you're bearish, right? Bear down. So if we're bearish on the market, we think that the price might go down. So the price of the market might go down, right? So bearish, bear down. We're normally going to buy put options because we think that the market might go down, right? So that's why we're going to buy those put options. So when the stock goes down, put options go up, right? So now that we have a basis, um, let's talk a little bit about volatility too, because this is going to make sense as far as like how we're going to create this strategy. Then I'll talk a little bit about SPY and QQQ. I'm going to use either one of those. I don't know which one yet. Oh, that's crazy. Texas said I'm not playing. They must return the kick. Yeah, Texas must return the kick. Hold on. Oh, come on, Mark. Texas must have cribbed the kick. Yeah, they cribbed the kick, y'all. All right, so volatility equals what's currently happening in the market right now, and the way that, and not in the future, it's real time. And the way that we can gauge volatility is one of two ways. We can use the VIX, right, or the VXN, Now, the difference between the two is that the VIX is a volatility index that's going to be based off of the S&P 500. The S&P 500 is the top 500 companies within the New York Stock Exchange. It allows us to be able to see, all right, what are these companies doing? And it's a range of companies, right? So let's look at a list of the top 10 holdings or the top holdings within the SPY. And remember, SPY is an ETF. An ETF is an exchange traded fund. Whenever you think of an ETF, an ETF is like a quilt or a quilt, right? And each one of these patches on a quilt represents a different company. So with this particular ETF here, there are 500 different patches, right? And these are some of them. We have Nvidia, we have Apple, we have Microsoft, Amazon, Broadcom, Alphabet, CLA. So this is Google. Don't ask me why they call themselves Alphabet. This is Facebook, and this is YouTube, right? How ironic. This is Tesla. Then we have Berkshire Hathaway. So these are some of the 1, 2, 3, 4, 5, 6, 7, 8, 9 top 10 holdings, right? Within the within SPY, right? Now this volatility index VIX follows the S&P 500, right? Meaning when we see, we're punting. All right, excuse me. Now when we see VIX pop, right? We're normally going to see the S&P 500 drop, right? So let me just pull that up so you can see. Now the market's not open today, so that's why we're not seeing live updates, but we are getting the last close, and it can work for the example that I'm talking about here, right? So I'm looking at the 1-minute charts, meaning that each one of these candles here represent 1 minute. Right. So with VIX, let me go back here. Because this is where we started our example. VIX is our volatility index for the S&P 500. Right. It allows us, and these are the top 500 companies within the New York Stock Exchange. Now, I only showed you the top 10, but these are the top 500 companies within it, right? So if we see VIX, right now it's getting a bit elevated. Anywhere a VIX between 10 and 15. Right. Yeah, 10 and 15, I'm going to call that calm waters, right? The market is stable. The market is not expecting a big move, rather bullish or bearish, right? Anything between 16 and 24, 25, it's a bit elevated. The market is on its toes right now, right? It's not expecting a big move, but it's cautious. It's wary. It's a little bit anxious, right? Anywhere between 16 and 24, I call that elevated. Now, anywhere between 25 and higher, we have high VIX, meaning the 25 to 35, let's call it 25 to 40. We have high VIX, 38. 25 to 38, we have high VIX. And then high VIX meaning is that the market is expecting a big move, right? Whether it's going to be a bullish or bearish move. And anything greater than 38, we're in chaos zone. You better know what the hell you're doing because the market is expecting a really big move, right? So volatility allows us to be able to capture what's going on real time in the market right now, right? And we use VIX as that volatility gauge. So, excuse me. With VIX being at 17 right now, what's that telling me is that, hold on, I just want to make sure I'm not tripping. Y'all can hear me. I'm not. All right, beautiful. And if you do have any questions, please let me know. Oh, all right, beautiful. So with VIX being at 17 right now, what this tells me is that the market is a bit elevated. And remember, SPY and VIX has a inverse relationship. What do I mean? Is that whenever you see VIX popping, right? Whenever you see VIX elevated, right? You're normally going to see SPY down, right? Now that's not always the case. Sometimes they're going to be the case where VIX up helps SPY up. But about 75-80% of the chance, right? When VIX is up, SPY is down. Right. Then we also have another volatility index that we can use, and that's VXN. Now, VXN is like VIX's cousin, right? VXN follows QQQ, and QQQ is the top 100 non-bank companies on the NASDAQ, right? So the S&P 500 is on the New York Stock Exchange. QQQ is on the NASDAQ. The difference between the NASDAQ and the New York Stock Exchange is that the New York Stock Exchange was founded in, I think, like 1791. a lot older than when the New York 1751. Let me get the right. Let me get the proper dates. Let me get the proper dates. So I'm not proper dates. So I'm not. I ain't. All right. Hold on. Here we go. Where is it? Hold on. Give me 1 second. All right, here it is. 1792. Maybe I wasn't 19. Never mind. So the New York Stock Exchange started in 1792. It is a traditional plus trading floor, right? So you're going to see people on there being able to pass their orders on from buyers to sellers, right? But the Nasdaq is a lot newer, starting in 1971. It's completely 100% electronic online, right? So the typical companies that are on the New York Stock Exchange is Coca-Cola, Nike, J.P. Morgan, right? John Pierpont Morgan, if you ever get that Jeopardy question. Nasdaq is going to be again the tech companies, right? So tech heavy. You're going to have Apple, Microsoft, Tesla, Nvidia, Broadcom. There's all these. There's going to be overlap, meaning that some companies that are listed on the New York Stock Exchange or will be listed on the Nasdaq, but not every company listed on the Nasdaq is going to be on the New York Stock Exchange, right? Why? Because the listing rules for the New York Stock Exchange is a lot more strict, and for the Nasdaq, right, it's a little bit more flexible, right? So for the New York Stock Exchange, it's classic Wall Street vibes, and for the Nasdaq, it's tech and innovation, right? So for QQQ is the top 100 non-bank companies within the Nasdaq, right? So remember, we have some overlap. See, we see Nvidia, Amazon, Microsoft, right? Broadcom. So let's look at QQQ. We see Nvidia, we see Apple, we see Microsoft, we see Broadcom, we see Amazon, right? We see I call Apple Amazon. Whatever. If I did, apologize. Alphabet A, right? That's Google, right? We see Tesla, we see Alphabet C, that's YouTube. We see Facebook, we see Netflix, Palantir, Advanced Microsoft devices, right? AMD, Costco, Cisco. So you can see T-Mobile, right? So these are the top tech companies within the US that is going to be listed on the QQQ, right? And VXN follows the QQQ, right? So, and I'm not going to say the same levels apply, but almost kind of sorta, right? But remember, we're in 20 for a VXN, whereas for VIX we were in, what was that, 17, right? So I'm still going to call this elevated levels. And as you can see, there is that inverse relationship, right? When we have, but not really, because both VXN and QQQ are kind of down right now. So you can see my point earlier, right? We do have an inverse relationship, meaning when one goes up, another one goes down, but sometimes they're at parity, right? Like when one is down, it can also drag QQQ down as well, right? So VXN is our volatility index when we're working with like QQQ, right? And then VIX is our volatility index when we're working with SPY. Now, I haven't decided which one we're going to be using yet, right? And I think we may just go over that when we are building out the strategy. So I think we have enough. Let me check how long these office hours went. Oh, cool. Yeah, that's not bad. It was only 15 minutes. All right, that's not bad at all. So I think we have enough to be able to start our start our algorithm, right? Now, what I want to do is, now we talked about the basis of it, right? Now I want to keep damn, Texas is really putting it on Vandy. I did not expect that. All right, now what I want to do is keep being able to build on what we talked about before. Now, before we get to the actual building of the strategy, is what we're going to do. Let's talk about what are the different types of regimes / markets that can occur when we are option trading. All right. These are broad environments that can help shape how the entire market behaves, right? We have a bullish strategy. Bulls have horns. What do those horns do? They point up, right? So that's an upward trend. I get it, bro. Get off my neck. Upward trend, right? Characteristics are rising prices, higher highs. Let's go. I told y'all I was just going to be We up right now. It was a 4th and 1, and we stopped SMU, and we got the ball back. I'm telling you, man, I better put some respect on it. Give me my ball. All right, let's go. I'm sorry. I'm not sorry, but I told y'all this is what it's going to be. So just bear with it. If you're watching the replay, just know that I'm a huge Canes fan, but whatever. All right, rising prices, higher highs, higher lows, positive sentiment, right? Option impact, calls gain value, puts decay faster due to time and direction. Common strategies are long calls, call spreads, right? I'm not going to get into spreads right now. Like, we're going to stay with either a call or a put. I'm not going to get into the multi strategy or the multi leg strategies, right? Because, like, I want our option strategies to be able to start at $100 and then grow from there. And we have done that successfully, but like, I don't want to start at spreads right now. Like, I kind of want this make this a little bit more risque than we have before. Bull put spreads, short puts if implied volatility is high. We have a bearish market, which is a downward trend, falling prices, lower highs, lower lows, fear driven volatility, option impact, puts gain, calls decay faster. Common strategies are long puts, put spreads. Let's go, Malachi. Bear call spreads and protective puts for hedging. We have a sideways or range bound market, right? Prices are oscillating, meaning going back and forth, and a tight range. Low directional conviction, option impact, theta. Theta's time decay, right? Dominates, great for sellers, right? Common strategies are iron condors, straddle or strangle, right? If expected a breakout, credit spreads, short theta plays. Then we have a transitional slash regime shift. This is a market shifting from one to another, a bull to a bear, a low to a high, right? I think this is an interesting one that I may even look at, but who knows? Option impact is that IV often raises slightly sharper. Directional bets can be tricky. Common strategies are candle spreads, diagonal spreads, long straddles or strangles if anticipating a large move, right? Volatility is the lifeblood of option prices. It drives Vega. So when you think of volatility regimes as an environment for implied volatility, low volatility calm market is VIX less than 15. Remember, we talked about this already, but we're getting a little bit more ingratiated into it as we're building out our strategy. And again, if you can't see this, Femcone, let me know. Oh, come on, y'all. And then I'll adjust it according. Cheap options, tight ranges, lower premiums. Good for long Vega traders buying options. Moderate volatility, normal market, anywhere between 15 and 25, right? Balanced environment, buying and selling options viable depending on bias. High volatility, panic market, anything greater than 25 to 30 plus, right? Expensive options, large intraday swings, good for option sellers once volatility starts to mean revert, go back to the average. Mean reversion means we're going back to the average. Yes. Remember, we have our little support and resistance graph here. So let's talk about mean reversion, right? So let's say we're talking about SPY, all right? So this is SPY, and SPY has opened up at 530, right? And then it popped, right, to 600, right? And what mean reversion says is that, yes, you're going to hit your new high, but you're going to revert back down to your average, right? So being able to catch these plays on mean reversion can be quite lucrative if you do it well, right? But I don't know if we're going mean reversion yet. More nuanced but important for advanced traders. Trending following regimes, a momentum dominates. Let's go, y'all boys. Momentum dominates. Moving average is a line great for delta positive position and directional bets. Mean reversion regimes, price tends to snap back to averages, better for credit spreads, iron condors or short straddles, high volatility, high volume, tight bid ask spreads, right? Faster execution, smaller slippage, easier to scalp a gamma or roll positions, low volatility, choppy market, spreads widen, IV may be misleading, be cautious, hedging and exit can be costly. All right, come on. Come on, get down, get down. I appreciate that. So bullish, right? We think the market is going to go up plus low volatility equals buy calls, buy spreads. And again, this is every trader has a different philosophy, right? Every trader has a different idea on how this works. But like ideally, you can use this as a basis to be able to grow our strategies, right? So bullish plus low volume equals buy calls, buy spreads, directional breakout. Bullish plus high volume equals buy call. Let's go. I need 6 of them, man. I need 6 of them, Joshua. I've been waiting for you, trader. I've been waiting for you, Joshua. Jojo trader, bro. Let's go. Go eat, man. Go eat, bro. Go eat. All right, let's get back to this. I'm sorry. Bullish plus high volume. Bull put credit spreads, sell inflated puts, bearish plus low volume, buy puts, bear spreads, anticipate a drop, bearish plus high volumes, bear call spreads, sell premium safely, sideways plus low volume, straddle strangle, expect a breakout soon, sideways plus high volume, iron condor, butterfly, harvest premium. All right. So we talked about the different regimes. We talked about, all right. Now, what are the okay, no, better yet, give me 8 great ideas for 0 DTE, 0 days to expiration, so options that expire the same day, right? 0 DTE strategies where the starting capital is $100 that we can begin to build on. Perfect. You're talking about 0 DTE, 0 days to expiration options with a small starting capital. The focus needs to be on high probability, small ticket trades that low risk relative to your account, but can scale. With 0 DTE, we're trading very short term gamma and theta. So strategies need to consider IV, time decay, and delta risk. Here are 8 actionable strategies you can build on. A mini bull call spread. I don't want any spreads right now, right? Because we're limiting our upside. Yes, we're limiting our risk, but we're limiting our upside, right? So limit risk, limit reward. I don't want this right now. I mean, the great thing about any call credit spreads, right, is that you're getting paid to be able to enter into a trade, but you're also limiting the upside. So I don't want a spread right now. A mini bear put spread. Let's not do that. So buy at the money calls plus at the money puts capture big intraday swings, either up or down. Split into tiny contracts to avoid blowing up the $100. High theta decay, so enter when expecting volatility spikes, right? So a long straddle, maybe. A short iron condor, sell out the money calls and puts, but buy further out the money calls and puts. Collect the premium if SPY or the target stays within the tight intraday range. Why this works? Theta decay accelerates. Keep the width narrow between $1 and $2 to fit the $100 starting capital. A ratio call and put. Buy 1 at the money call put and then sell 2 out the money calls and put. Did we talk about out the money in the money yet? No. So let me talk about that. I'm sorry. My fault. So we're talking about out the money, in the money, right? So when trading options, moneyness tells you how the option strike price compares to the current price or of the stock or ETF like SPY, right? So in the money, ITM, out the money, OTM, at the money, ATM, right? So let's look at our example right here. We have call right? And its current price right now is 498 in our example, right? That 498 price, this is at the money, right? So this is the current price of SPY, right? So to buy a 498 call means that you're at the money, right? So let's say we are buying, remember SPY is the S&P 500, the top 500 companies within the New York Stock Exchange, right? So let's say we bought a 501 call, right? This 501 call, this is out the money, right? Because this is two or more. Oh, come on, tackle. Thank you. 501 call. This is two or more levels up for call, right? So what do I mean? The current price is 499, right? If we buy a call that's 498, excuse me. If we buy a call that's 499, that's in the money because it's super close to the 498. 500 is in the money, super close to 498. Now, for me in my house, right, I like to use two levels. Now, I've heard there are different schools of thought to this, right? Or I've seen, excuse me, that there are different schools of thought to this. I've seen as high as 10 levels, which I think is crazy, right? But for me in my house, it's two levels. Two levels is more than enough for it to be able to delineate between out the money and in the money, right? So 499 in the money, 500 in the money. Anything greater than or equal to 501 is out the money, OTM, right? And the goal is to be able to get the out the money stock at the money, right? So how do we do that for a call? Well, shit, we want the price to go up, right? Now, let's say for a put, right? If we were to buy a 495 put, right? This is out the money. The current price is 498. So 497 in the money, 496 in the money. Anything less than or equal to 495 is considered out the money for put. So two or more levels down. So we understand out the money, in the money, or at the money. At the money is at the current price, right? Out the money for calls is two or more levels up. Out the money for puts is two or more levels down, and everything between those two levels, right, is in the money. We get it? Beautiful. Any questions, please let me know. I'm here all week. All right, let's keep going. So the reason I wanted to talk about that, because we're seeing ATM, OTM, ITM. I want you to understand that. We know what 0 DTE is. That's 0 days to expiration. All right, ratio call put spread. Buy one at the money call or put, then sell two out the money call or put. Capture the directional move with a small net debit. Works best for underlying in a trending strong one direction intraday. A mini butterfly spread. Buy one in the money call, sell two at the money calls. Buy one out the money calls, or the put version. Profit from a little move near the at the money strikes. Tight risk to reward. Again, I don't want spreads right now because that's going to be kind of crazy. Gamma scalping plus a delta neutral play. Buy an at the money straddle or strangle or delta hedging with tiny intraday moves. Capture these small intraday swings repeatedly. Tips need active management for no. All right, these all suck. I mean, they don't. The only thing, again, I don't want spreads. We're limiting our risk, limiting our reward. I mean, yes, it's a great thing, but I mean, it's not what I want, right? I don't want straddle. I'm not trying to. I mean, again, this is overcomplicating it. We're talking about buying 2 to 3 options here, 2 to 3 options here, 2 to 4 options here, 2 to 3 options here. So I'm not really digging it, homie. So let's reframe this question. All right. Great starter package, right? Starter ideas. But this isn't really the core of what we are looking to get at. So let's start again and then provide ideas that are akin to gamma scalping, but without having to use spreads or straddles, etc. All right, ATM gamma scalping, buy a single at the money call or put when SPY Targets show strong momentum intraday. Capture the capture the small intraday swings. Sell when delta moves favorably or after the 20 or 50% gain. Wireworks 0 DTE are highly sensitive to underlying moves, high gamma, so tiny moves create outsized P&L, profit and loss. Momentum out the money scalping. Is it always just going to put scalping? Let me see. Okay. Scalper. Scalper. All right, let's read this and let's pick one that we like and we want to be able to build on. Momentum scalper. I kind of already have something like this already, so I'm not going to do that. This gamma one, I don't. A momentum scalper we already have for our Bear Lair baby. If you go check out another one of our videos, I'm not going to have y'all go down this route again because we already created it. Opening range spike play. Enter a long call or put at the first major breakout of the day, first 30 to 60 minutes. Ride early volatility spikes and exit within minutes. While this works, early moves often trigger high gamma and 0 DTE. Buy a news and event scalper. I'm not going to do that. Support or resistance flip. Buy a call near the intraday support or a put near the resistance with clear reversal setups. Capture the bounce off of the key technicals. Oh, okay. So it's Trey Wingo, and it was like a little pop pass. All right. VWAP and moving average scalper. I'm not going to do that. Gap fill sprint. Trade 0 DTEs on the first 15 to, excuse me. Trade 0 DTE options on the first 15 to 30-minute moves, aiming to capture the gap fill. Fast small profits as price move towards close. I think I like this one, this little gap fill sprint. Implied volatility, spike interest, buy at the money or out the money options when IV is low. And when IV is low relative to the intraday spikes, momentum brewing, capture the first sharp move as the traders react. Exit fast, IV decays over. Okay, so what do you all like, right? Give me a vote if you want 1 through 8. Again, I don't recommend any of the scalping ones because we've already done those. Like I want to try something new with y'all. I'm liking this gamma one, even though I know it's a scalping, but I'm liking that one, and I'm liking the support and resistance flip, and I'm also liking the gap fill and then the IV one. Um, what do you all want to do? I'll put it out for a few seconds. Let me know. What do you all want to do? We're up in theta. 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 All right, I think I'm going to go with this gap fill, gang. Yes. All right. So let's break this down. So this is going to be our strategy. All right. There you go. There you go, Mark. Let's get some contrast here. Let's make this black. All right. That's fine. Wait. Boom. That's the goal. All right. And then why this works, let's just make that a different color. All right, beautiful. So we're going to do the gap fill sprint. Fast profits as the price moves towards the prior close. Trade 0 DTE options on the first 15 to 30 minutes, moving to or aiming to capture the gap fill. Why this works, 0 DTE gammas allow small moves to magnify returns quickly. All right, so who are we going to use? Who are we going to use? I think we're going to use QQQ and VIX, VXN, right? Remember QQQ and VXN, that's his partner, right? If I was using SPY, then I would have to use VIX. So I'm going to use QQQ and VXN. Trading session is going to be between, all right, come on. Trading session is going to be between, now we only want the algo slash bot to trade between the following. Trading session is going to be 9:33 a.m. to 11:58 a.m. All right, I'm trying weird hours, so y'all just bear with it. So a trading session is going to be 9:33 a.m. to 11:58. I don't want to catch the morning open. Let's just do 11, okay, 32, because it may be a little bit too chaotic, right? Then let's talk about how we get into the trade, right? How how do we enter the trade or find a signal to enter the trade? It spells signal, right? Signal to enter the trade. So what we're going to do, matter of fact, I have an idea, but all right, let's proceed with number 7. Um, Now we want a max hold time of max hold time 28 minutes. Max hold time of 28 minutes. Let's start there and begin to build out the strategy. All right, core idea. We're taking advantage of the gaps at the market open and the sharp intraday moves. We're buying at the money or out the money calls or puts depending on the gap direction. Hold time is the max 28 minutes or exit early if the profit target or stop is hit. Single leg option, simple gamma scalping style approach. So compare. So how are we going to enter? We're going to compare the current price versus the previous close. Gap up, consider call. Gap down, consider put. Momentum filter. So I'm only, okay. Confirm move is strong. The first 5 to 15-minute candles confirms directions, but not immediately reversing. Optional. We're not using any of these indicators. Reason being so because these are lagging indicators, and we're talking about being able to take advantage of gamma. Remember, gamma is fast moving. Being able to use these lagging indicators are going to put us ass backwards, right? So I'm not going to use these lagging indicators. We're just going to use regular. All right, if the current price and the previous day price, this comparing right here, we're probably going to add something a little bit more, but let's see. All right. All right. All right. So let's take this. I'm going to take this and then we're going to flip it up our own way. So first, what I want to do, let me start with the entry. Yeah, let me start with the entry. Boom, boom, boom. Let's get this right. Don't worry. Let me just take out the extra stuff. Take you away. Take you away. Thank you. Thank you. Almost there. And then last one. I need to bring you back down here. All right. I'm not using that. So entry conditions, we're going to compare the current price versus the previous day. And then gap up, consider call. Gap up, consider put. I don't want a momentum filter. I want to make this a little bit, like, not a little bit, a lot aggressive. Right? So no momentum filter. The first 5 or 15-minute candle confirms the direction. Price not immediately reversing. Option selection, 1 to 2 strikes at the money or out the money. High gamma, affordable, and then the price option. Okay, I'm fine with that. All right, I know I'm bouncing back and forth. Okay, let me finish here and then I'm going to take the strategy. All right, a few things. First, we do not want the momentum filter in the entry, nor using the lagging indicators such as VWAP or MA. We want also to be able to select further OTM options. Um, Position sizing is going to be the following. Now, I did have one. Okay, I have one that like I really like that I'm going to bring in here. And hold on. And this is one that I tend to just like always use. I'm not going to hold you because it gets us right. So hold on. Let me get the position. With this one, but I'm going to be a little bit more aggressive. Is going to be the following. So anything less than 499, we can use up to 90% of the balance, right? So it's going to be $90. And then anything between 500 and 1,000, we can use up to 50%. I'm still cool with that. And anything greater than 1,000, we can use up to 20%. All right. Exit rules 30 to 50% from the entry. Adjust for real time gamma swings. Stop loss is okay. Let's talk about that. 3, or we have a position, so that's 4 for the exit rules. Is this a 1 to 2 risk reward ratio? Um, Explain before we accept. Risk reward ratio, right? So what that means, 1 to 2. For every $1 we're risking, I want to be able to make $2, right? 2 plus. Oh, come on, man. So that's what this risk reward ratio. So with a profit target, let's call it 50%, and then a stop loss of 15%. If you were to double, that's like a 2.5, maybe 275. So that may be good. I'm not using any of this right now. 5. We are not using any of that right now. 6. Okay. We are using QQQ, not SPY for this one. Let's discuss now. All right, core idea, trade QQQ based off the pure intraday gaps without any lagging indicators, no VWAP, MA, or pure or prior momentum filter. Entry triggered only by the gap detection, gap up, call, gap down, put. Focus on single leg trades, including further out the money strikes for higher gamma scalping. Max hold time is 28 minutes. We'll size the position dynamically based off the portfolio balance. I love that. This allows flexibility to enter deeper out of the money options without over leveraging. Excuse me. Always round sizes to the full contract so we can afford. Entry rules: gap up, call, gap down. Super simple. And then we'll make it a little bit more. We'll add our edge as we're going through the strategy. So this is super simple. Strikes at the money or 1 to 5 strikes out of the money, depending on the balance and the risk tolerance. The goal is high gamma while staying within, come on, man, the capital limits. Timing: enter after market opens. Confirm that the gap price. So we need to trade 9:30. After market opens, exit, aim for 1 to 2 risk reward ratio. If max risk is 90, profit is 180. Small repeatable wins without over trading. Stop loss fixed per allocation. For example, $90 allocation, max loss is 90 or less for account with fees. 1 to 2. This is standard for micro scalping. You're risking $1 for potentially making two. It prevents small loss from eroding and it lets winners compensate multiple losses. All right. All right. We are only trading one time per day between 9:30 a.m. and 11:58 a.m. EST. Now lay out the full strategy parms so we can review and discuss. All right, trading window, one trade per day between 9:30 and 11:58. Intraday gaps are usually most exploitable for 0 DTE scalps. Underlying instrument is QQQ, single leg, either call depending on the gap detection. Trigger, gap up, call, gap down, put, at the money or out the money. Enter after the market opens, confirm gap at any time between 9:30 and 11:58 EST. Notes, pure fill gap logic. We have our dynamic position sizing, exit rules, 1 to 2 risk reward ratio. Like we didn't flush. Okay, I'm gonna flush this out with Claude Code. Can select further 0 DTE for higher reward potential. Active monitoring. All right, so this is a good place for us to be able to take this strategy now. And then let's flush this out. Let's continue to finish this with Claude Code. So what I'm going to do, let's go ahead and open a new folder. This folder, this is our strategy that we just began here on YouTube. Let's call this one, this is, gap fill QQQ. Let's just do that, gap fill QQQ. And then open. Again, I'm using cursor, and with side cursor, we're going to be using Claude Code. So let's open up Claude Code, .py. I need you there. I need you there. You are awesome sauce. All right, give me a second. Our usage should be Gucci. Our usage is Gucci. What I want to do, I want to get the exact model I want to use, because remember, we only use 4.5 Sonnet around these POCs. Clear, 4.5 Sonnet. Let's grab our strategy. Review the following algo option trading strategy we want to backtest. Before we proceed, we want to flush out a few items before proceeding with backtest. Review strat, and let's discuss. I don't want to confuse it. I don't want to rename you. I want to delete you. I want to delete it. And then just make sure my levels are Gucci. You all can hear me. My levels are Guantanamo. All right, beautiful. Levels are Gucci. Now I'm going to let that one go. We got some great football going on, ladies and gentlemen. 17, shit, that's crazy. I didn't expect that. I did not expect that. Big news Saturday. I ain't see Penn State play in a minute. Let me just put a little eyeball on them. What is the threshold gap defined as a gap? Is it 0.1, 0.25, 0.5? The gap measures prior day close versus current. The minimum gap size to trigger. Let's do 0.0, 0.1. So let me write it here. So 1, the min gap size to trigger is going to be 0.1% to start. We want to be a bit more aggressive with this strat. 2, strike selection logic. Need a precise rule for choosing between at the money or out the money strike. What is the difference between what determines the available capital and the gamma exposure in practice? Should we use delta ranges instead? Ohio State and Penn State. Yeah, Ohio State is going to trounce. All right, up to yes, we agree. Let's use, oh man, got him. Let's use delta ranges in lieu instead, starting at point 0.05 through 0.68. 3, entry timing ambiguity. After market opens confirm gap. What confirms it? First 1 minute bar, 5 minute bar, or immediate entry at 9:30. Does gap need to persist for X minutes? All right. First 2 minute bar, gap needs to be persist for 1 minute using 1 minute data, which we will review after we have nailed this down. So 4, exit mechanism are the take profits and stop loss based off a percentage of premium paid, the absolute dollar amount, or the percentage of the underlying moves. How to handle the partial fills near the 28-minute mark. So exits, again, this is option trading. So no partials, all or nothing. And we are looking for a 1 to 2 risk reward. We can start with SL of 20, stop loss of 20%, meaning that if we're starting at $100, if we get down to $80 at any point in time, stop, get me out this trade. No, let's do stop loss of 15% and TP, take profit levels. Take profit levels. I have this other take profit that I may be wanting to introduce here as well. Hold on. Let's see. All right. Here's this take profit that I'm thinking. Let me see what you all are screaming. Hold on. And for TP levels, read. All right. Let me put it here and let's talk about it real quick before I go to it. All right, perfect. This is TP, take profit levels. And the first 5 minutes, if we hit TP1 at 110% exit, right? And the first, okay, we got to adjust that because, hold on. Since we're in this for 28 minutes, and the first 12 minutes, if we hit TP1 levels at 110% exit, if else, if between 12 and 18 minutes, if we hit TP levels at 70% exit. But if between 18 and 28 minutes, if we hit 35 exit, last chance to make money. Okay, I like that. Slippage, 0DTE has a wide bid-ask spread. Need a realistic assumption for slippage. I'm going to get you that. I'm going to get you that in a bit. Don't worry. 5, we are going to get you this information. Matter of fact, let me just grab that right now. Backtest. And this is from a previous back test. I was going to bring it in anyway, but let's bring in the um, slippage information is right here. Beautiful. See. Oh, did I get everything? Oh yeah, I got everything. Okay, perfect. And then data requirements. I already have the data. 6. C data. Um, we will get the data to you after we have flushed this out. Edge. The strategy assumes that the gap fill tendency is this validated for QQQ. No directional edge mentioned. Just assumes gap fill. Zero DTE gamma can work both ways in rapid decay. So strategy strength, weaknesses. Okay. Um, give me a great quant level idea to add edge to this strat. All right, beautiful. Here's our responses. Here are the responses. Let's discuss. Well, so y'all are seeing my process, right? Nothing really hard about this. Nothing that is going to um, ruffle the feathers per se, right? This is my process on how I create a algorithmic strategy. I mean, I've done this a couple of times with you all, but I want to um, all right, so gap fill, minimum gap fill, zero point 0, measured previous day close versus the current, delta range between 0.05 and 0.68, aggressive covered wide strike range, entry after 2 minute confirms, gap persists for 1 minute using 1 minute data, gap direction, gap up, call, gap down, put. Um, that's crazy. I didn't expect that. Exit logic between the first 12 minutes if it's 110%, exit 70%, exit and 18. Okay. Stop loss is 15%. Okay, we have our fees. We have our, okay, edge ideas. Quality gap filter, pick one or two. Volume spike, I don't want that. Gap size sweet spot. Avoid tiny gaps, noise. Avoid huge gaps. New paradigm won't fill. Optimal zone between 1 and 2. Overnight catalyst. That's going to be kind of tough. B, directional bias enhancers. If gap up plus previous day close strong, skip. Continuation, not reversal. But if gap up plus prior day close weak, take. Likely pullback. Add mean reversion logic. VIX level context. VIX is less than 15, tight range gap fill faster. VIX is greater than 25, erratic gap extends more. Rule only trade when VIX between 12 and 22. Strike selection, closer to the money, at the money. Okay. I it's picked off. Bruh. Gap fill range. No, I want to do this one. This one seems like the coolest one, so I'll do this one. Um, we'll add the following to start. All right, I'll do the following to start. That's fine. Now let's discuss how we enter, exit, manage, etc. so we can fully understand it and then quickly SWOT. Strength, opportunities, weakness, threats. That's crazy. We just gotta play some football. That's all it is. Just play some football, bro. Just play some football. You'll be all right. All right, we're just flushing out our strategy before we get to the back test. Once I flush it out, then I'm going to have it check the data. Then once we check the data, then we're Gucci them. Entry, gap up, 930, gap detection, open, previous day times 100. If gap, trying to proceed to filters, previous day, calculate the day momentum, close volume, gap up. If previous day is a strong green bullish, skip, proceed, gap down. If close was red, skip. If it's received by put. Okay. Confirmation 2, wait for 2-minute bar. Check if gap persists after 1 minute. Does persist means price hasn't reversed X percentage towards question. Does persist means that the price hasn't reverted X percentage towards the previous day close. Strike selection. Scan options for deltas around 0.05 and 0.68. Do we pick the highest delta for maximum probability, the lowest delta, or the mid range? On a quality okay, let's go back to answering these questions. One, how many different things need to happen in order for the trade to trigger? Two, um step 3 is, does persist mean it hasn't reverted? No, we want to keep it simple for now. Persist mean, okay, persist, okay, means that persist means it hasn't reverted 2% or 1% back towards prior close. Step 4, we want a quality / weighted score for us to determine which one to buy based off the underlying contracts. So each OTM or ATM has an opportunity for selection and there is no bias. Execution, active logging every 1 minute, current. All right. Question on the 15% stop loss. Is this check every minute or at specific intervals? SL is checked every minute when we have an active position. No adjustment, no rolling, no adding positions, no hedging, all or nothing exit, 1 trade per day, once entered or skipped, done for the day. If entry appears at 9:32, 9:15, or 11, do we first take? Okay. We want the first best one. So if it occurs at 9:32 a.m., that's what we'll use. And if it isn't the 9:32 a.m. one, then we'll continuously scan until find one. No valid trade, skip trade for the day. Yep. Option bid goes to 0.0, exit immediately. Option bid goes to 0.0, illiquid. I mean, we should be able to check for illiquid. We should not be entering illiquid positions. But yes, if that is the case, exit now. We are holding for a max hold time of 28 minutes. So there should be none going to 3 p.m. All right. All right. I think we have enough to be able to. Let's give that over there. Let's discuss. All right, we're just working out our strategy right now. This is part of the process, right? Everything ain't bells and whistles, right? We have to be able to go through the strategy, flush out these ideas and questions, right? Then once they're flushed out, then we can get to the back test. Then we can get to the fun stuff. So we're flushing it out. I use two different AIs in order to do this. I started with ChatGPT, and then now we are in Anthropic's Claude Code. Now, Claude Code is where we're going to be doing a majority of the coding too. But at times I like to be able to use it just to reaffirm and to go over our strat home. All right, so let me map out every condition that must be true in order to trade a signal. Time windows between 9:30 a.m. and 11:58 p.m. The gap size is the open minus the previous close divided by the previous close is greater than the 0.1%. The previous day gap alignment, if gap up, previous day must be closed in red. Weak, if gap down, previous day must close in green. Strong, gap detection. Bro, you had Elijah Lofton. All right, gap detection 931. Price hasn't retracted $1 back to the previous day close. Confirmed by 932. 2 minute bar completed. Gap still valid. Valid strikes available at lead one option in the delta range between 0.05 and 0.08 exists. If 932 scans failed, any filter continue scanning every minute until 11:58. Strike selection, a weighted scoring system. You want no bias towards at the money or out the money, so each strike gets a fair shot. Here's what the scoring system would be. Proposed scoring between 1 and 0, the gamma weight times 40, liquidity weight times 30, and then the value weight times 30. Component breakdown. What the hell? Y'all, I don't know what just happened. That just, that was weird. That was weird. Hold on. That was weird. It just closed out on me, homie. All right, hold on. Let me get you right. All right, let me delete you. Let me go back to what we were talking about. All right. We were talking about this weighted system. Okay, sensitivity to the underlying moves, normal gamma across all strikes, higher gamma and delta ranges between get max profit, reward, most responsible to gap filled, liquidity, weight. Okay, final pick strike with the highest total score. Alternative, a simpler delta neutral lottery. If scoring is too complex for backtesting, then equal probability for each score is valid strike if strike where 0.05 is less than delta 0.08. Random, pure lottery. Which do you prefer? More edge, better fills. Faster backtest. Test pure gap fill logic. Hmm. Stop loss monitored every 1 minute. I'm still kind of, I don't know. I don't like this random one. I rather the weighted system. Checked every 1 minute while position is active. Triggered if the current is less than 50%. Immediate sell at the bid plus the 1% slippage. Entry confirmed if all six filter. That's a lot. If any fails. All right, this is a lot. All right. Valid strike, that's fine. If it okay, what I got to do, let me drop a few things. So for the entry percentage, For the gap, we want to go from 0.01% to 0.001%. All right. We are going to use the weighted scoring system. And then action, max hold time, enter at 9:32, force close at 28, enter at, okay, force close. Confirmation, no position held, pass, okay. 6 things must happen for trade to trigger: time, gap, previous close is opposite, gap persists, okay, 2-minute confirmation, and then liquid. After first scan, after first entry, after entry of first day, stop scanning, correct? Yes. Yes. Once we enter and trade for the day, we are done for that particular day. All right, homie, let's get this on. Let's see what is screaming, what is doing. All right, we're getting our back test ready. We are practically to the point where we are going to have it up and popping, y'all. I mean, I love that. Thank you for getting us off the field. All right, locked in. Minimum gap, ultra aggressive, catches micro gap moves, no max gap detection, will catch everything from tiny to huge. A weighted scoring system, one and done, first entry valid trade, done scanning, no multiple trades per day, complete trigger, okay, buy call, buy put, gap detection, hasn't retracted more than $1. Okay, I may need to update that too. All right, strike scoring. I love it. And then we have the selection, the entry rules. Well, it's not gonna happen, homie. Sell off, sell off, sell off, force close, illiquid abort. If interposition becomes illiquid, bid a point zero 0.01 or spread. Okay, 50%, exit immediately. The fees and the slippage, the position, maximum allocation, reverts, okay. Outstanding items, need definitions for illiquid threshold. Um, so one, hold on. One, illiquid threshold. Let's use C. Two. Expected to move. Okay. How much does QQQ need to move for the option to hit 110%? And what? Weighted value scoring. Use delta approximation. Use simple strike Greek distance. I don't understand that question. I don't understand this question. And then 3, max gap size. Men, should we cap at um let's start with no max gap. Then as we review back tests, we can adjust accordingly. let me go get this data. Let's go get this QQQ data real quick, and then we can introduce that. So hold on, bruh. Sprinter data QQQ Parkway. All right, let's discuss before we review data, then move to backtest. All right, so I have my QQQ data right here. I'm going to copy the path, um, throw that here. You know where else I want to put it? Nah, it'll be better just to put it here so I can just have it, right? QQQ data, boom. And then what we also need is our VXN data. Good shit, Marion. VXN data is right here. Copy path. Perfect. So we have VXN. Beautiful stuff. So we have QQQ and we have VXN. All right, so let me explain the issue when it comes to the value weighted component of our scoring system. The value weight equals the expected move to TP divided by, good catch, Malika. Oh, come on. Divided by the premium cost times 30. We need to calculate the expected move to TP. How much does QQQ need to move in percentages for the option to reach our target practice? Setup, trading at 550, gap down to, okay, we buy puts, betting for further downside, gap fill. We have 3 strikes to choose from. Okay, how does QQQ itself need to move for each strike to hit 10, 50, 420, 105? Proposed method is the delta approximation. Simple. How much does QQQ need to move for it to move? So delta target equals premium 550 gain. So the value is the QQQ is the lower score. Okay, equals higher score. Fast entry ignores gamma, delta, black swan. Use the option pricing model with gamma, vega, delta. Simple calculates the. I still don't understand that, bruh. Um, we still do not understand the method. So can we just use the Greeks we have available? Believe this is a good time for us to bring in the data review. And let's discuss how we should proceed. What am I going to do? Use the Conda environment to run a series of terminal commands. Then let's discuss. We getting it right. Perfect. Now we're just having to check the data. But once we have it, all right, let me examine the actual data structures. Perfect. Get me right. The data is going to be outputted. Give us a second. We're almost to the part where we're going to start coding. So don't worry. This is just part of the process. I know we've been going for about 90 minutes now when we haven't, I mean, we kind of coded, but this is part of the process, right? I mean, if you want a good strategy, if you want a strategy that's actually going to give you what you need, right? Like you want to take your time with it. You don't want to rush from one part to the next. And like if you don't know something, right? If you don't have an inkling to what that is, like you want to be able to flush it out. So that's what we're doing right now. We're flushing it out. We're going through our data. And once we get to the back test, that shit'll be easy. I just need you to tackle. Thank you. That's all I need you to do, bro. Texas, when I say they are all over. 2 touchdowns, 11 for 14, 185. Where has been this all season? Let's see. And again, I'm just waiting for Claude Code to finish this analysis. It's analyzing the data right now, our data sets. It's a lot of data, so I understand why it's taking a bit. So once it's finished with this analysis, now we check the VXN data and then create a data summary. Like checking the data. Then once it has an understanding of what it is, then it's going to give us a quote unquote summary, right, of said data. Then we can proceed. Remember, I told you NASDAQ, VXN NASDAQ, right? All right. So it's creating this. Let me go grab some Algo real quick. All right, we should be getting to a point where we get the output, and once we get the output, we'll be able to proceed with said work. Right, family. So we are doing great. We're getting to a point like right now we have 4 bots that is ready to go, is lined up and ready for paper testing on Monday. I've already been, excuse me, I'm I've already been paper testing them throughout these past few weeks, right? And I want to add this one to it, and then this next week I'm really going to go hard with being able to paper test and then make sure like our data is ready. Remember, the difference between back testing and paper testing, right? Back testing is putting our data or putting our strategy in a time machine and then dropping it off in 2024 and then see how well it does. And then we're going to drop it off in 23 and see how well it does, right? So in essence, a backtest allows us to validate our strategy on past data. Now, if the strategy does well in the past, there's a high likelihood that it'll do well in the future, right? There's no guarantee, right? So then paper testing allows us to test our data in the current. So that's why we're going to be doing the two. So we already have strategies that's already went over back testing. Now I want to paper test them starting this week. And this is a new strategy that we're going to back test. So you all are seeing the entire process, how I went from the idea to the actual strategy. And then we're going to back test it in a few here. So we're talking about our data that we have available. That's perfect. That's beautiful. Since you want just the Greeks, since you want to use just the Greeks we have available, we can use this for scoring. Sensitivity to move. Okay. Simplified scoring using real Greeks. For strike selection and delta range, gamma score equals, okay, perfect. Liquidity. All right. Uses only the Greeks in your data. No complex calculations are needed. Perfect. Use the simplified 3 Greek scoring, or even simpler. Pick the highest gamma in the range. No. Um, 1. We are good with using the 3 component scoring mentioned above. 2. Merge the QQQ, open, high, low, close data, and then the option Greeks by timestamps. For each 1 minute bar, find the nearest option snapshot. Handle the timestamp alignment. Why? Why do this? Do not understand the reasoning behind it. Thank you. We ain't playing. Should we check the spread too, or just the bid price? Um, let's start with just checking the bid price for the backtest architecture. Loops through each trade. No. We have the reference file we are going to show you, but let's flush out the entry, exit, etc. to ensure we are good. Da 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 dum, da 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 dum, da 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 da. Man, I'm excited, homie. I ain't gonna hold you. Like, I'm really excited to see how this strategy is going to work out in a bit. Like, I'm excited that we have not only taken the time to be able to really flush this out, but that we're not rushing through this. You feel me? This is definitely going to pay dividends, and I want to make sure that you all see the entire process because, shit, if I can do it, you can too. This isn't hard. This isn't something that takes rocket science. So you see how I'm using our AIs, right, to be able to flush when I don't know when I don't know something, when I have a question, right? And that's what I love about being in this time right now because it shortens the learning curve, right? Yes, there's still a couple of things that we're going to need to know, i.e. about option trading. So that's why I took the time to be able to preface that and give y'all a little accelerated, like you're drinking through a fire hose, for lack of better words, right? So once you have that, now we can be able to understand a little by little what we're doing. Now, this may seem confusing at first, but I implore you, like, keep following, keep coming back, keep being interested, right? And then you're going to be able to understand it bit by bit and create your own strategies. Then you're going to be like, yo, creative, look what I just did. And I'm going to be able, and I can't wait for that day. So y'all just keep following along, and we're doing great work here. All right, entry. Beautiful, beautiful. So let me lay out the complete entry and exit step by step so we can validate everything. All right, previous day close, red. All right, green. Okay, buy call, buy put, enter. All right. I love it. All right, find valid contract, illiquid filter, scoring system. First time we're using lambda in a Greek. That's interesting. Calculate position size. All right. Calculate entry. Expected. Process. All right. I mentioned merging the timestamps here. Why? Is because it has bars between 9:30, 9:31, 9:32 exact minute. The Greek might have timestamps between within minutes. Do we need to find? Okay. Let's do this now. Now I need you. Is this a? Oh, this is a nice one that you can look at. This is a nice test. Here's a back test that I'm going to bring over as a reference. Copy. Boom. Reference. Back test. Reference BT. And then copy path. All right. Beautiful. And then here is the reference back test. Now review. And let's discuss how we can use these examples to create our backtest before we proceed. A lot of great stuff here. All right, we're almost there, people. We haven't checked the data. Data's Gucci. We're just finishing up a few final minor questions, and as soon as those are solidified, then we can proceed with being able to wait. Let me make sure. Yeah, this is it. Yeah, it's Gucci. It's Gucci, homie. We'll go back here. Come on, Malachi. Come on, Malachi. Come on, Malachi. Man, we all right. I just got a little excited. I ain't go. Just got a little. I got a little excited. I got a little excited. Oop! Get off me. Ran into his own man. Then cuts back across the field. I'm talking about 20 yards across the field. Then he's headed to the 30, to the 20. Right? He's at the 10. He got out at the 5-yard line. Let's run it, homie. All right, trade. Perfect, perfect, perfect. All right, perfect reference data. Let me break it down. The data loading. We can use the same structure, but we can skip the VXN. We're not using it yet. All right. R level, new strike. Okay. Create a complete script now. Build it incrementally. Start with the gap. Okay. Let me the gap persistence, etc. All right. Let's proceed with creating our backtest for this. Call it gap fill baby bt.py. Let's make sure to follow what we have been discussing and start with 2024 for the backtest. All right, let's put it on auto. Oh, we should have ran the ball. I ain't gonna hold you. Elijah Lofton. This is mud. All right, come on, y'all. SMU calls the timeout. All right, we're creating our back test. You know what I can do? I want to keep this clean. Delete. You know what I also need is our backtest results folder. I don't want to create it. I can create it. It's nothing hard to do there, fam. All right, give me a second. All right. Create a folder called backtest results. Within that folder, create subfolders called 2024, 2023, and 2022. Within each subfolder, create another one with V1 baseline within it. Touchdown! Oh, damn. I thought Eli got it. I ain't gonna hold you. All right. So we have our results. That's how our results gonna go. All right. Our back test is ready. Now we can run our backtest. Hold on. Backtest V1 new high baseline. Um, I'm gonna run it. I kind of don't trust you to run it, so I'm gonna run it. Let's run our backtest. Y'all, we about to see a backtest 2024, min gap fill, target. So we went through all this work. It only took us about an hour and 40 minutes to be able to get to the backtest. This is cool. This is great though. Like you all are seeing the entire process, right? The backtest shouldn't take that long, about 5 to 7 minutes. To be able to get this backtest done. So now it's loading. Again, a backtest is like dropping your strategy in a time machine, right? We're dropping our strategy in 2024, and I want to see how well it performs on 2024, right? Based off this performance, we may tweak it or tune the strategy, meaning we may adjust parameters. We may add a filter. We may add another parameter. That's what's up. We up 10. I'll take. We up 3. I'll take that. I will take that. It's actually just really putting it on them. So I'm waiting for the backtest to load. Once the backtest loads, then we'll be able to really gauge that results. And again, there's a couple of I don't know. I don't know what I'm expecting right now because this is my first time being able to run this type of strat. You feel me? So I don't know what I'm expecting, but I'm expecting something good. So all right, let me just put. I want to say north of 480. Let's just say north of 480. Let's see. All right, here we go. The backtest is running. All right, so we just had our first trade, right? Our first trade was we had a gap detection. It was a call. We bought a call with a strike price of 402, the delta of 0.52, gamma of 298, right? The score of 96. We got in at 8, right? We were up, but how do we lose money? Oh, excuse me. We bought it for $8, but we got out at 38. There was the stop loss hit. Right. So let's just keep reviewing. Oh, we got our first profitable trade. Okay, there may be a couple things that I need to adjust here, but again, let's just let this backtest run. The backtest is running. We're seeing a mixed bag right now. That we may need to adjust based off of what we see. And again, if we don't have the money, we're not going to be able to trade. So that's what it's showing here. No money, you can't trade. That's okay. That is okay. That is part of the process, right? So we just got out of January. We have $18 in the account. So let's see what the strategy does. And this is okay. This is part of the process, right? Oh, we got a shootout? All right. We're running our back test. We're just seeing the results, right? Right now, it ain't looking too Gucci, right? But that doesn't mean we give up, right? I'm probably going to run a few versions of this to be able to see. I'm gonna let you know where we started and where we're going, and we're going to do this all without overfitting, all without introducing bias, right? So you all are seeing my entire process from being able to go to from the idea to the back test, and we're at the back test version of it. So y'all, this is probably how the backtest is going to end, but I need the data. So we're going to run it until the end in order to get the data, right? Because we got to start somewhere. Like I can tweak. There's a couple things I want to tweak right now, but let's just run our data. Let's just run it to get a baseline, and then we can improve from there. Again, we're waiting for the back test to finish. This most likely is what is going to be for the year, right? But again, we need the data, and I'm going to let it finish. And then once it finishes, we're going to do some tuning. So just give it another 2 to 5 minutes here, and then it's going to wrap up. Then once it wrap up, we're going to pick up right where it left off, right? To be able to do some tuning. And again, tuning is just adjusting some of the parameters based off what we've seen from the back test. And again, I'm waiting for this back test to finish. We need the data, so that's why I haven't stopped it yet. I want to be able to see what worked, why it didn't, and what didn't work and why, right? So I'm waiting for this to finish. It may take another 5 minutes or so to be able to get through this. But again, we're getting great data here. It may not be the results we want, right? But it doesn't mean it's not useful. So I'm just waiting for the data here. We're almost done. As soon as this wraps up here, about another 60 days or so, as soon as this wraps up here, we're going to review it and check out what's been going on. So I'm just waiting for this back test to wrap up. And as soon as it wraps up, we'll pick up where we left off. All right, our back test has finished up. Let's go ahead and review and figure out what worked, what didn't, and how we can improve upon these results. Yeah, and that's why I didn't want to have him run it because it would have timed out. Then he would have tried to said, "Oh, it's taking too long." So that's why I like to run our own back test. So what was it? So we can have it. Our final balance was 1863. review, and let's discuss V1 of backtest results. All right, we're going to be moving. We're going to be moving a lot quicker. I think now that we have we have trades, we have, um, so now we just need to adjust a few things. Well, that's fine. This is part of the process. All right. Backtest analysis, critical issue, extremely low delta selection. Only when strategies consistently picking deep out of the money options with deltas between zero point zero 0.05 and zero point zero 0.09, bottom of our range. Why this is bad? These options decay to zero fast. Data burn, need huge moves to profit, especially lottery tickets, scoring. All the winning strikes scored 96, 97 gamma heavy scoring, deep problem, deep out of the money options have higher gamma, more explosive if they move, lower ask, higher delta per dollar, but never in the money. All right. Tiny trade sizes, not enough, small, tiny, one decent one. All right, only two meaningful trades had the gaps, immediate stop losses. All losing trades hit the 15% stop loss within the 1 to 5 minutes. Why zero DTE with zero deltas have a massive bid act spreads. The entry slippage of 1% and the exit slippage of 1%, negative 2% already. Any slight adverse movement is an instant negative 15%. Option price between zero point zero 0.08 and 16. 1200%. Okay. The verbose that gives them the entire, like everything we saw. We have the fill. Then we got our trades. All right. Now we're just going to adjust a few things. All right, key fixes needed. Raise the minimum delta way too low. Need options with real probability of profit, not lottery tickets. Increase the minimum gap size. Ridiculous. The actual tradable gap versus noise. Fix the scoring to use the favor higher delta. Current problem, the value scores favor cheap options. Add a delta weight to score gamma. Widen the stop loss. Lower the TP ranges. All right. So this is what we are going to do. First, min gap percentage, we are going to 0.0003%, and TP range, delta min, we're going point 15, and keep delta max, and stop loss percentage we are going to zero point 0.2, and TP, there you go, 1270%, 1850%, and then 28, 25%. Let's do these. All right. Move 2024 baseline into the proper folder. Move, do not copy. All right, let's get organized. Perfect. You're in your folder. I love that. All right, let's go, Canes. Watch it go work. All right, so the minimum gap. All right, now we're doing backtest v2 with this is what we changed, and then new high. Good work. All right, now let's run our backtest. Excuse me, I ain't trying to cough in your ear. All right, now let's run our backtest. Let's run our backtest, our version 2 of the backtest, and let's see what we screaming. Good work. Good work. Good work. Good work. Oh, at 15. At 15. I love it. I love it. All right, we're running our back test. We're still dropping the strategy in 2024. We've just updated the parameters based off what we've seen, and I'm interested to see how this is going to work out. I'm excited, and I think this is going to work out for our benefit. So let's check it out. There's a game at 10 o'clock tonight. They're playing in Mexico City, the Mavericks and the Pistons. That is crazy. I'm going to check it out. I ain't going to hold you. I think that's going to be a good game. 10 p.m. tip off. That's crazy. These NBA games, bro. I'm not gonna hold you. Most of them, like the West Coast games, I like it. But these tip off at like 11, 11:30 Eastern. I mean, I get it for the East Coast. Like, is what 8 o'clock, 8:30. Um, but I'm like, yo, it was late, bro. But nonetheless, I mean, I appreciate basketball into the late night. It's cool. I like it. And I've been seeing some great balls, some nice surprises. Especially with the Trailblazers. The Suns are looking like kind of sneaky good. Timberwolves. I don't know about the Clippers. Oh, the Jazz is looking kind of sneaky good, but I don't know. It's like 4 or 5 games in. So first trade, we peaked at 6.5 touchdown. We back. So first 2 trades we lost. Right now we're at $56. First 3 trades didn't make it. $56. All right, we made our first profitable trade. We made $32. We hit 74% TP, and this was done in 13 minutes. So let's take a look at this a little bit more. So this was a put. Gap was there. We're in growth mode, right? And we bought one contract. This contract was $45, and then we were able to make 32. Let's see where we're at right now. This is give me shade the last shit. Hold on, brother. I'm not gonna do this again. Give me a second. Let's see if we can get the. Can we get all of these trades? Okay. Can we get all of them? We can get all of them. Okay, this is what I'm going to do. All right. Review the results. We stopped the backtest. Let's discuss before adjusting parms. Okay, so let me just make sure I can see everything. Yes, you can. You can see the trades. Okay, perfect. I put that darn on Frank Todd sauce. I put that on everything. That's funny. Waiting to see what the AI is going to output. I hope it isn't frozen. I don't think it is. Okay, here we go. Let me analyze what happened and adjust the parameters. The V2 minimum gap, this is good. The target, TP, the results, 10 trades in 40 days. More, oh damn, more than the 6 trades. The final balance was 1727. Total loss, trade by trade. We had one winner and then all these stop losses. So what is the looking at the gap, the triggered SL noise, tiny, 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 still small, still small. Only 4 trades is in the biggest gap. The pattern is clear. Is that 100% stop loss rate, and then zero point 0.6 is mixed. One winner had negative 82%. So the max gap is still catching noise. The delta improved, but still low. Version 2 Version 2 Delta range. All trades are between 0.15 and 23. These are barely above the 0.15 minimum. Still borderline lottery tickets. The winning trade 4 had a delta of 0.22, highest of them all, and the gap of 0.82, biggest gap, and hit TP3 in 13 minutes. Pattern, higher delta equals biggest gap, bigger gap equals success. The entry timing consistency, okay, not 932, way late, why efficient, funds for early opportunities. By Feb 1, account was so depleted that it couldn't afford the first valid strike at 932 and had to wait for cheaper options later. Even with the 20% stop loss versus 15, 90% of the trades hit the stop loss. Why are they hitting the stop loss? The 0 DTE bid-ask spreads are brutal. Entry at 0.27 with a 1% slippage. I just need you to tackle. Thank you. Immediate bid already hit negative 11%. One tick down is 20%. Low delta range decay faster. Zero point 0.5 needs QQQ to move 6.5 times to break even. The theta on 0 DTE is negative 5 to negative 10 per day. 10 minutes is significant decay. One winner trade 4. What worked? Let's dissect what the winning trade worked. So it was the 17th. It's a big gap down. A previous green direction was the put, the highest of the trade, the most expensive contract, hit quickly, exit in 13 minutes, and then best trade. Why this worked? A meaningful gap, highest delta, strong directional move, and held through volatility. Peaked at 935, exited at 945. Thank you, bro. I needed you to drop that. The real problem is that we're trading noise, not gap. The 0.03 gap is a $12 move of 12-cent move, excuse me, on a $400 QQQ. That 12 cents, which is a normal bid-ask spread fluctuation, market maker's inventory adjustment, random tick noise, right? Not tradable gap fill opportunities. Recommended trend is to get real gap is the 0.25. Need a $1 move. We did 0.03. I'm gonna do 0.12. I'm gonna try 0.12 instead of 25%. Delta range from at least 30% in the money probability. Avoid too far in the money. Stop loss is wider from 20%. Need entry plus tick volatility. Keep. All right. All right. This is what we are going to do. Gap percentage can go to 12%. 12%. All right, let's try 8%, not the 25% proposed. Still higher than the 0.03%. Then what else? What else? What else? What else? You want to do target? Okay, let's do target min delta equal 22, and then max equals 62, and then stop loss is 30. That's still 2 to 1, because even if you were to double it, okay, let's do stop loss and then SL 28, 28%. All right, let's do that. Let's do this. I am liking this a little bit better. We're seeing progress, ladies and gentlemen. We're seeing progress. We're seeing the actual backtest materialize. So we're updating our gap percentage. We are updating the target, delta min and max, and then the stop loss. But you always want to run it. That's cool and all. Bust stopped early. V3, boom, new high. All right, let's run our back test. Let's run our back test. Let me just delete that one for now. If I need it, I'll go grab it, but I don't think I will. Let's run our back test. All right, our back test is loading. Let that thing load, and then once it is running, I will be back to give the commentary, the play-by-play, if you would, you know? So give me a second. All right, so let that run. All right, we're running our back test on these new parameters. It just started. Let's gauge how well it performs. If you care, Miami is up 3. Oh, look at that. We just popped over 100. The first trade was profitable. It was a call. So let's see. We're at 123.48. Oh, look at that. Second trade was profitable. We're at 148.33. Okay, I think we found something, ladies and gentlemen. I think we found something, but let me shut up. Let's see what it does. Okay, we just took our first L, 68. Two back to back. If we can get out of January above $100, then we are in great shape. We just took 2 straight losses. We're out of January and we're at 90.50. So let's see how we can perform in February. We just hit three in a row. All right. We are in middle of February right now. It hasn't found any entry, and that's fine. I would rather it be play a little bit more conservative, right? That was just a losing one through and through, a losing one through and through. I mean, it was a little positive here, but again, losing one through and through. So run the ball, y'all. Good shit. Trader. Oh, it's Jordan Lau. My fault. And that's fine. That's fine. We're at a place around. We're out of February. We have $19, 1994. So let's see if 94 could do us well, man. Excuse me. All right, we're in March. All right, we're in mid-February again. We just haven't found a option right now that we can trade that we can afford. We have 1994. So I'm trying to see if 94 could do us well. If it can, let's see if we can survive 2024. There was a couple of good trades, right? So there was a couple of good ones, a couple of bad ones. So we are making strides. It's just a matter of being able to find it consistently throughout this year. So I'm seeing that we just need to adjust a little bit more. Um, but hey, we're doing great things. So we're waiting for a new trade. We haven't seen one in about 60 days or so. Trade time. I'm just waiting to see if we can get in. Right now we have about $19 available to trade, and we are waiting to see if we can get in. So as soon as we see one, I will alert you on and let you know. But this is great work. We're seeing a lot more activity, right? We're seeing a lot better trades. It's just being able to catch, like, miss the noise. Like as soon as we can miss the noise and truly identify, okay, where's that gap fill sweet spot at, that Goldilocks spot, quote unquote, then we can be able to like actually see this strategy work the way it was intended to. So we're doing great things, ladies and gentlemen. Like I don't want to have you all saying, oh, it is a process. I'm not going to hold you, but it's a process that is worth it, because once we get to the other side of this thing and actually have an algorithm that understands what we expect of it and follows the rules, oh, we're flying off to the flying to the moon, ladies and gentlemen. So let's keep this work going. I'm going to let this back test finish because we need the data. So let this finish, and then we'll be able to continue this work. We actually found a trade, but it just didn't turn out to be profitable. So this is probably where we're going to end up for the year. I'm going to let this finish so we can get this data, and then we'll be able to adjust accordingly. We are waiting for the back test to finish. I know it has been a minute. We're just waiting for this back test to finish up so we can have the data. Once we have it, then we can be able to pick up where we left off. All right, we just finished up the back test. Now let's go ahead and get the results, bring it over to Claude Code, and then let's analyze what worked, what didn't work, and then adjust our parameters accordingly. Good shit, Fletch. Review and let's discuss. A new high. $14.47. Russellford. Okay. All right, waiting for the output. As soon as you see the output, we'll be able to see what the impact of our adjustment for the parameters were. Needed that, needed that, needed that. All right. The minimum, okay, that worked. Delta worked, unchanged. Summary, the time stops. Breakthrough momentum versus 1 through 3. Yeah, I saw that. This is what success looks like. Get the fuck. All meaningful gaps, 0.26, 0.82, higher deltas versus 0.15. Hit, take profit, no stop losses. Good shit, Malachi. I needed that first. That's a first. The collapse trades 4 through 7. The turning point, tiny gap. Bought 4 contracts, overconfident from the wins. Hit stop loss in 3 minutes. Largest loss, 32% drawdown. Losing patterns is okay. Look at this. This had a held for a full 28 minutes. Wrong. Tiny gap, small gap. Okay, key insight is the gap size matters as the main predictor. Losers, it had a gap less than 0.25, 7 out of 9 losers. So the gap of 0.12 all failed. Conclusion 0.028 is still too low. All right, so where are we going to go? Minimum gap 0.5 from need real gaps. This filters out 9 out of 12. Okay. For better, avoid, keep, it's working. No, I want to keep the TP levels. Early gaps only. Uh, run before. Okay, so we have a couple calls. We have a couple things to be able to figure out. So one thing is the minimum gap, right? I want to explain what the okay. Before we commit to anything, review and explain this to us like I'm 12 years old to make sure we understand it. Get the field goal, Barbara. Just get the field goal to make sure we understand it. No more than 328 total tokens for output response. Yeah, good call. Good call. Good call. Thank you. Thank you. Thank you. Thank you. What is the gap? Imagine QQQ is a stock. Imagine QQQ stock closes at 400 yesterday. The next morning, it opens at 40.32. That's a gap of 0.088 cents, right? Per 100. But that 402, that's a gap of $0.52 per 100. The problem is the tiny gaps. 8 cents might be just normal market noise, buyers and sellers shuffling, bid ask spread bouncing, random tick movement. It's like finding 8 pennies on the ground, not worth bending over for. But the real power is the real gap's point 0.5. $2 move, something actually happened, news, earnings, a big event, real imbalance to fill. Snap back to normal, enough movement for the price to fill. It's like finding a $20 bill, definitely worth picking up. What our data shows is that gaps less than 30%, 7 losers. Gaps between zero point 0.3 and zero point 0.6, 1 winner, and then 1 loser. And then gaps greater than zero point 0.6 are 2 wins and then 1 loser. So tiny gaps, 0% win rate, lost every time. Big gaps, 67% win rate, 2 out of 3. So why raise it to zero point 0.5? Simple math, get the fuck. 9 out of 12 trades had gaps less than 50%. 7 out of those 9 trades were losers. We're filtering them out to avoid most losers. The 3 trades with zero point 0.6 all made money. That's your winning formula. Real world example. Bad trade. QQQ gaps from 40 to 40 68 cents. You buy a 47 option hoping it moves. It wiggles plus or minus 20 cents. Normal noise. The option dies. We lost $68. Good trade. Gap is 40 to 30.69. A $3.28 drop. Real panic. Real bouncing coming. You buy a 45 call. The gap fills, the option goes to 79, made $65. Bottom line, bet real gaps, not noise. All right, let's go with the gap min of zero point 0.5. What else? And then I'm keeping the delta min max the same. And then I'm keeping the profit targets the same. So only thing I'm changing is the um and I'm gonna keep the time the same. So only thing I'm changing is the gap. Okay. The gap to zero point 0.5 and keep everything else the same. All right. We are at V4 gap increase to zero point 0.5. Okay. And then new high. All right. Kept. All right. Beautiful. Let's just go ahead and get that for our notes. And then what we're going to do is move this V2 2020. So 2024 V2 gap. What was it? Gap Delta. I was just watching that game. Delta min max, and then SL changes. All right. So while that's being moved, perfect. Then let's get our backtest running. All right. I need great defense, ladies and gentlemen. All right. So let's wait for our backtest to load. That's what I love to see. But I told you to move these files. Now move these. Now move these files in that folder. Damn, seems. Seems, bro. All right, here we go. Our backtest is running. This is version 4 of our backtest, and we've updated to have the gap a little bit higher than we had previously. So let's gauge the results and see what we are able to see. All right, we had our first trade. We made 23, and it hit TP3 levels at the 25% after 20 minutes. All right, we had another one meaningful. We made the $64 in 13 minutes, and that hit TP2 levels 50%. And this one, it was a put. Bought it at strike of 403. We bought 45. Stop loss was 33, and then we sold it at 79. Sold it at the peak, so that's beautiful. We just had our first loss. This was minus 48. So let's say if we can get out of January above 100. So this is the first time we got out of January above 100. So let's see where we go. All right, so let's see where we go. So we had a couple things happen, ladies and gentlemen. Let's go look. Okay, so I really can't see. So let me just wait for the backward test, the results. All right, we're waiting for the back test to finish up. We're almost there. We caught one last minute trade. That was a loss, but we're almost done. All right, so we just had our back test finished. All right, we have our peak. Um, 10 trades. All right. I mean, it ain't phenomenal, right? But it's something to be able to build on. All right, review and let's discuss. All right, we just had our back test finished. Now we're going to review it and we are going to gauge the performance. I'm excited for you all to be able to see this. Like, this is my entire process. It's taking a little bit longer today. I don't know if because I'm watching a game too, but nonetheless, we are working. We are making our way through being able to have a fantastic excuse me, a strategy that's built from idea to backtest. We're just in the backtest portion of it right now. I was about to say 10 trades, 340 days in the entire year. Final balance was 27. Peak was at 188 after 2 trades. Win rate is 30%. Critical finding, first same 2 winners. I understand that. Then the losing streak, a little late winner, right? But stop loss, stop loss, stop loss, stop loss, stop loss, stop loss. Key insight is the big gap is not the automatic wins. Looking at the failures, the gap size alone isn't the edge. Something else is wrong. is the wrong. Okay, put all were gap up calls. All gap up trades followed by a previous red weak close, yet the 7 out of 8 failed. Theory is that the gap up plus the previous weak close equals reversal. Reality, gap up keeps going up. Continuation, not reversal. So the filter logic must be backwards for gap up. Delta's too low. All trades have a delta between 0.22 and 0.26, still borderline lottery style. Winners had slightly higher, but this is not high enough to overcome the bad direction. Late entries equals worse. Okay. Late morning gap momentum is gone. So why gap down works but gap up doesn't? Sellers exhausted by the open, bargain hunters step in. Neutral bounce equals mean reversion. Gap up equals overnight euphoria. FOMO buyers pile up in the opening. Momentum continues up. Gap fill doesn't happen. Continuation. No, the theory assumes all gaps revert. Reality, only gap down reverts reliably. Only trade gap down, revert. Y'all, hold on. This is going wild. I'm not gonna hold you. It's just clutch time. Under 2 minutes to go. Down three. SMU driving. Hold on. We just in clutch time right now, ladies and gentlemen. We're in clutch time right now. Reverse. What can we do to fix the gap up problem so we can have both calls and puts working? Advise via TLDR. Listen, we in high pressure times, ladies and gentlemen. I'm about to get this in. We just in high pressure times. Hold on. All right. This is just high times, ladies and gentlemen. Gap up. So what we're doing right now, we're trying to fix the gap up. The gap up continuous momentum is not reversing, not mean reversion. Reverse the logic for gap up, buy call, ride the strength. Gap down. This works. Gap up is momentum. Okay. We're going to fix the gap up, and then we're also going to. All right. Keep the gap up, and then I'm going to keep everything else the same. All right. Reverse gap up and keep everything else the same. V3 2024. Um, let's move. All right, so let's get our back test running. We have a field goal. They have to kick a 38, 39-yard field goal. Let's see what happens. We're going into overtime, ladies and gentlemen. I would rather us being a little bit more aggressive, but we're going into overtime. We have our back test running, and now we're waiting to be able to see what has happened. We are at $67 right now. We got out of January at $67, so let's gauge on how it's going to work and its performance. All right. We just had another first trade in February. This one peaked. No, it was just a straight loser and time stop. So, waiting to see how this is going to work out. We do have $52 available, and okay, we just made $34. And this was a call. So look like our changes did work. We held it for 12 minutes. It was a TP1, made 70%. Gap was strong, right? Score was strong. Entry, okay. So the logic within itself is working. We're just sometimes catching a little bit more noise. So let's see. We're at $87 right now. This is kind of the highest I've seen it at this point in time. Now it's just a matter of saying, okay, you know, how well is it going to perform for the remainder of the year. So we're in March. In the first week or so, we haven't found a gap. But that is fine. There's no worries. High pressure time, ladies and gentlemen. We are in overtime in a game that I thought that we had an opportunity to be able to win in regulation. But hey, nonetheless, we're not going to judge nor blame. We just want to be able to get this win. So we had another trade just came in, and this was a call. We had a lot of gap. Delta was kind of low. The score was 99. We got in at 44. We got out at 29. So, okay. We just had another trade. This one didn't work out. So we're starting on the office, ladies and gentlemen. So let's see how this works out. Account is kind of sorta, and no, it is kind of sorta. It is blown. So let me do this. I want to grab the trades. I'm gonna stop it. Grab the trades. Review. Come on. My fault. Yep. Again, I'm in this, y'all. All right, perfect. Review and let's discuss. Stopped early due to running out. Let's review. So let's check the analysis as soon as it's done. I'm not even gonna say nothing. Nine trades before the account was blown. Final balance was 19. Trade by trade. Okay. Still winning. After reversing the gap up. Peaked at 23. Quick failure. Quick failure. Okay. Um. Hmm. Hold on. Let's look. Um, bruh, it is what it is. Let's finish this up. Let's finish this up. So the gap up winner was trade seven. Why this worked? The gap was enormous. $9+ on 430 QQQ. The pattern is clear. Gap ups that failed all point 0.5 and 0.12. 0.5, okay, all lost. Gap up winner was 2%. Normal gap ups of 0.5 to 1.2 don't work either direction logic. The only massive gaps have 2 plus momentum. The reversal isn't the problem. It is the okay, B5 barely in a movement. The issue isn't the previous day filter direction, it's the moderate gap ups that don't have reliable edge. Why gap downs work? Overnight fear, snapback, psychology by the dip, mean reversion is strong. Why gaps up fails? Not big enough for momentum continuation, not small enough to ignore, stuck in the no man's land, neither trade nor noise. Huge gap up, okay. Only trade gap downs. Skip. Alternative, raise the gap up threshold to 2%. Only massive, and then keep. All right. Let's proceed to raise the gap up, gap up threshold to 2% and keep everything else the same. We're compacting, so let me just go ahead and let this compact while we are wrapping up this part. This was supposed to be done a few times, but Miami Hurricanes, man. That's all I'm gonna say. But I'm gonna finish this work with y'all, man. We started this. I'm gonna finish this. We're gonna be diligent with our work, and we're gonna finish this out. We're gonna be diligent with our work, and we're gonna finish this. I'm gonna grab some agua. Hold on. Well, that happened. That happened. So I'm just going to update the parameters and then run our back test. You are not running it. I am running it, homie. Okay. And then let's run our back test. What I'm going to do to you, put you over there. And let's run our back test. So now we're running our back test so we can get this in. We're just updated the parameters for the gap up. So let's see what happens. All right, our back test is running. Our back test is running. Let's gauge the results. So this is the highest that we've been so far is at 188.21. So let's see how well it goes. Right now we are just north of 188 for our back test. This is the highest that we've seen it in the back test. So again, I'm optimistic. Let's see where it goes for our back test. If you all do have any questions for this, please let me know. I know it's been kind of a sporadic day. I was watching the game, and it didn't work out in our favor. So that unfortunately sucks. But you know what? It is a long football season, and I know the ACC can be very tumultuous, right? So let's see how it goes for the rest of the season. But nonetheless, let's just pick it up. Let's just pick it up from where we're at. We haven't seen any trades yet in February. We are maintaining the position of the 188. So I like that, right? I rather under instead of overtrain, and let's see how well it goes. Look at what we just caught. The highest I've seen it so far, a $93 profit. We at 281 right now. This was a call. So we are doing well. TP2 50%, right? It went negative. If it was at the first stop loss, this would have been stopped. Well, look where it went in 18 minutes or in 17 minutes. So this is not bad at all. This is phenomenal. So it seems right now we're oscillating back and forth between like 150 and 200. We just had our largest loss of $100, and then we just made it up with this TP hit. But it seemed like that loss could have been easily mitigated if we would have taken it at 35 because it reversed against us violently. So let's see where we go. So we're waiting on our back test to finish up, ladies and gentlemen. We are at 159.42, the highest that I've seen it so far. It looks like this strategy is super selective on how it trades and what it trades, and that's fine. You know what I noticed? I may just, um, I don't know. I mean, I've learned a lot throughout this time, and I'm not gonna hold you. This may just be a one that we chalk up as a lesson. Yeah, this is probably gonna be one of our lesson episodes. Yeah, because this isn't. I think what I'm going to really position us at right now is just being able to be really good at creating momentum, breakout strategies, and then mean reversion strategies. Then we'll get to the gap fill strategies because this can maybe work for SPY, but I want to test that in my own. Maybe I should have tested that like now while we were. Okay, let's see. Explain this strategy like we are 12 and make sure to include all the parms and configs for it. Open gap fill SPY. Then we're gonna come here. Gap.py. I'm gonna close you. Remember, we only use 4.5, so let me get 4.5. Perfect. Review the following. We want to adapt to SPY. Let's discuss how we can do this before we proceed with the backtest. You don't need that. The backtest is running. Yes, the backtest is running. I have my SPY data. That is, hold on. Major differences QQQ and SPY. QQQ is 1.5 times more volatile than SPY. Tech heavy versus broad market. Need to adjust the threshold. See, that's why maybe the gap fill wasn't it. Maybe we wasn't supposed to go gap fill, right? Maybe we were supposed to go um okay, hold on. Maybe we were supposed to go. So I like this one too. Also like the momentum out of the money scalper. Buy slightly out of the money calls with strong upward trend or put downward trend. Catch the rapid intraday spikes. Okay. All right. I want to try this. I know this says gap fill SPY, but I'm not doing SPY. We're just excuse me. We're going to keep to QQQ, but I'm going to try something different. Okay. Instead of changing to SPY or doing gap fill, we want to build out a strategy using QQQ and maybe some of the current strat parms for. Let's discuss. And I should have did this before, where like I'm simultaneously building this, and I'm not just stuck on one, so we can pick the best one out of the two. Because this gap fill one, I ain't gonna hold you. It may not be it, but let's see. Great pivot. This is a cleaner approach than gap fill. Let's break down what we need to define. Buy cheap out of the money options with momentum. It is already strong. Ride the wave and then quick scalps. RSI. See, that's the thing. These are lagging indicators. All right, let's distinguish a few things. First, we do not want to use. Okay. Let me get the data. Let me get the data so I can like really have this conversation. All right, let's come here. First, we do not believe using lagging indicators for this, such as RSI or VWAP, will work. So let's reconsider how we should do this for the entry. And right now we are doing max one. Matter of fact, max one trade per day. Um, uh, hundred $100 starting capital with the same 90% for less than 4.99 up to 50% for 500 to 1,000 and 30 no 20%. Well, we just caught another one for anything greater than 1K. Um, let's discuss. So we just caught another one. This was a put. It is at $55.55, 57.55 for the profit. We're at 186.63. It was a TP1 hit. All right, you're right. RSI and VWAP are lagging. Let's think about real-time price action instead. Price action signals no lagging indicator. Strong directional candles. 1 minute or 5 minute gap up 20% with size. Breakout confirmation. Breakout price breaks above the recent high. Last 15 to 30 minutes. Consecutive green. Um, what actually shows? Okay. Logic. A QQQ moves 0.25% in the last 2 minutes. Momentum confirmed by call. Option B, breakout plus confirmation. QQQ breaks above the 30-minute high plus the confirmation by call. Okay. We want to be able to buy calls and puts. So breakouts and breakdowns as well. Here is the data we have. Now, with this in mind, let's discuss. Use the conda environment, run a few terminal commands to understand the data set. Then let's discuss with this in context. My fault, y'all. Like I should have been just running two. I didn't think about this until later. But we're going to be a lot more efficient with our time here. Hopefully within the next hour we can crank out something that can work for what we are aiming to do here. So if you do have any questions about this process here, please let me know. It is your boy Creative. We are working diligently to be able to create this strategy, and I'm not going to leave until I have a strategy that actually works, right? Without overfitting, without doing too much to it. Meaning, like, I'm not going to force it to work. If it doesn't, exit it out and then go to the next one. You know, let's not try to make something that doesn't work, right? And what I'm seeing right now with this gap fill, I mean, there is potential, but yo, my G, um, it is sole mate. All right, we just had another trade come in. This was a put. It seems as if we were in it for 2 minutes. We lost $55 and then we exited. Again, that's what I'm thinking. This gap fill may not be it. But again, we're going to let it run and then we're going to gauge. So on the left here is the gap fill strategy. On the right, this is going to be another momentum strategy that we're going to be using on QQQ. Now, I've always wanted to have all basically my momentum strategies are on spy. So now I want to try one on QQQ and gauge how well it can perform for us. All right, so right now we're having Claude Code just go through the data and being able to understand it. Then once it understands it, it can properly allow us to be able to navigate creating this strategy. Perfect. Now I understand the data. Let me check one more thing to be realistic about the bid-ask spreads. All right, we're almost there. Come on, go ahead and output. Go ahead and output. Bro, I really think this guy feel excellent. I have full contacts, 1 minute, clean prices, Greeks for all of them. Okay, breaks up above the 15-minute high. Next 1 minute candle closes higher confirmation. Move at least 0.25% in the 15-minute high. Break down 15-minute low. Next 1 minute candle. Target slightly out of the money. Liquidity filter, bid-ask spread, tradable spread. This naturally gives you 1 to 2 on options. Okay, take profit, 35% in 8 minutes, whichever comes first. Stop loss, 25%, 10 minutes max. Risk, okay, 1 trade per day to avoid. All right, a few things. Um, I want to drop this down to like 5 minutes. Breaks above 5 minute high. 5 minute low. So few things. We want to drop the 15 minute to 5 minutes. Let's do 3 minutes and then move the minimum breakout to 0.12 point one not 0.12 and that is not, so we're risking, no, that's too less. And TP of 68. 68%, wait, 78, no, 88% for TP1 and TP2 at 25, okay, 55% or exit at 10 minutes. VXN we are going to be trading anywhere between 3 and 38 VXN, and delta we are going to go from 0.15 to 0.6. Now lay out so we can review it, and trading hours are 9:35 a.m. to 11:58 a.m. EST. Let's lay it out. All right, let's go back to this little mean reversion. What I want to do is I'm tired. Let me run it on 20. I'm gonna run it on 23 before I update anything. Review and let's discuss before running on 2023. All right, a momentum out of the money scalping strategy. It is QQQ momentum breaks up 3 minutes rolling high. Next 1 minute candle closes, confirmation, move it list 0.12 from the 3 minute high. QQQ breaks down, rolling. Next 1 minute, okay, confirmation. Delta range, liquidity, okay. Tiered, exit immediately, 55, okay. All right, beautiful. Risk, no trades outside of this one. All right, slippage. The only thing is a 3 minute rolling higher low. Breakout threshold confirmation is a okay. Then the delta range, and then TP1, TP2. Okay. All right. All right. Should we have the time on the TP ranges? Meaning if TP1 happens between 0 and 5 minutes, exit, or TP2 happens between 5 and 8 minutes, exit, or exit, time stop slash max hold before we proceed. That shit is not solid, bro. One gap up trade crushed it. What is problematic? Is the stop loss is still hurt? Okay, I'm gonna come back to that, bro. A time tiered is more conservative. More aggressive is anytime. Okay. No. I want to do B. We are going to do B. Now lay it out again so we can review it. You need, hold on. I need to go grab, we need to go grab a QQQ backtest. Here's one. Here's a QQQ backtest that we're going to use as a reference. Beautiful. Same one we used for the other one. Rename reference example BT. Okay, breakout detection, pure price action, break, momentum up, momentum down. We talked about that. The strike selection, the exit, best price wins, TP1 at any time, TP2 at any time, or stop loss, time stop exit regardless of profit loss. Potential order is TP1 greater TP2, stop loss, and time stop, whichever triggers first. And then position sizing is tiered. Okay, minimum to trade is 10. Stop before account blown. Only trade when VXN is between 3 and 38. No trades outside of this range. Only trade between 9:35 and 11:58. Should I do 9:33? I'm going to do 9:33. I'm going to be weird. Exit. All right. Only thing is we are updating the time to trade is from 9:32. I'm going to be a little bit more weird. 9:32 EST to 11:58 a.m. EST. Now review the reference backtest. Then let's discuss how to create it with what we need for this strategy here. All right, let's go to this little dumpster fire. 4 stops, negative 236, 64% of total losses. The biggest loser was trade 4, 108, 59% drawdown event. The max drawdown is still brutal. Trade by trade pattern is strong start, then crash, recovery, floppy finish. I agree. Before running on 2023, only 11 trades in 2024. Is this exploitable? We need to check how many 2% gaps occurred in 2023. How many 0.5% gaps occurred during green days in 2023? The 59% drawdown is psychologically brutal. Options tighten stop loss, but already happened at 28%. Reduce the risk tier factor, no, or add a daily loss circuit breaker. Did 2024 just get lucky, or no, we need 2023 to validate? Before running on 2023, keep the V6 parameters as is to test redundancy. Don't optimize yet. I know, dipshit. All right, let's update so we can run on 2023. All right, pure price. Remove volume. Okay. All right, let's proceed to create the backtest. Okay, I was about to say you found it. Create the backtest. Call it Momo baby bt.py. Let's get this done. Oh, so that's what we need to do to run it on 23. I was about to say, let's just double check. Let's just double check. And it's running on 23. All right. What is this? V3. Let's move in 2024. All right, we're running it on 2024. Let us gauge the performance. All right, I'm waiting on another. We were creating another back test based off another strategy that I'm running, and our current strategy that I'm testing out. I don't know how well it's going to survive, so I'm creating another one. And what I'm going to do, if this gap fill one doesn't work, I'm always going to scrap it and then go to another one, right? Because we're going to finish a strategy today. By dawn it, we are going to finish a strategy today. So I'm waiting for 2023 backtest to load. All right, here we go. We're cranking. Where they go? You going all out for these little commercials? All right, we got our other back test. We have it up and running. We have it up and running. See, I'm not gonna let you run it because you're going to. First trade was a loser. That invokes confidence. Dun 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 dun. All right, now we're running our momentum back test for QQQ in 2024. We have on this side a momentum scrapper. On this side is a gap fill. The gap fill is looking like it's bruh. Um, so I want to gauge how that goes while we have our momentum one going. And again, I may just trash that one and go to another strategy because this doesn't look like it's working out for us. And that's okay, right? Some are going to hit, some are not. But I need to get quicker and faster at being able to realize, all right, this isn't going to work. Throw it in the trash and just move it to the next one, right? Don't try to save every strategy, right? Every strategy isn't meant to hit. And if it doesn't hit, that's okay, right? Like just don't hold on to something longer than what we need to. And I think that is what we are. That's what I just fell victim to today, is being able to hold on to this strategy when I wasn't supposed to. So, nonetheless, I'm going to trash that one, and we're probably going to keep working on our Momo. And I'm going to have another one that I'm going to bring in to try out for our QQQ zero DTE strategy. Some are going to work out, some aren't. And I'm glad that you all are seeing this, so you can actually see like this process. And I'm not. There's no capiana, all real, all real, and you get to be able to see. So I'm waiting for our momentum strategy that we're running on QQQ in 2024. You just saw that it was a little bit quicker to go to that strategy, right, and to understand it. Now I want us to be able to really hit. With this in mind, I just figured out something. That's interesting. All right, so our momentum strategy is running. So let's see how well it does. And it's interesting. Oh, the first trade was $56.36. We made it in 3 minutes. This was a call contract. We bought it at $70. That was kind of high. And then we sold at 126, right? So we're running. Well, the strategy's already at $400, bro. Um, It's doing well. The strategy is doing well. It's at $400, and again, it doesn't overtrade. If it doesn't find a signal or an entry, it just moves on to the next day. So strategy just moved over to February, the momentum scalping strategy, and then it was able to maintain it. Now it's at $611. I should be documenting this. um, while we run the back test. Explain to us how it works like we are 12 and the full parms as well. It's at $1,000, y'all. Okay. I think we found our winner. I think we found our winner. I think we found our winner. Um, Mo, 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 QQQ, Strat. It's at $1,300, y'all. It's at $1,400. We have maybe, and I'm okay. I thank God for this because I learned on the spot. Like I'm not going to hold you. I'm not one of those ones. I just learned, and I learned something great today that I'm going to apply for future streams. Okay, let's grab our momentum strategy. Beautiful. Here is our momentum strategy. All right. Entry. We have our option selection. We have our position sizing. Let's just go peak. The strategy's at $2,500, bro. This is version 1. See, that's what I want to say. I want to focus on V1 backtest baseline. Baseline. New high. 2024. It's at 3,000. We just crossed 3,000 for our strategy. We just crossed 3,092. We are in April, mid-April, and we just crossed. We're at 3,400. So as you can see, like, yeah, I think that's going to be the vibes. We found a strategy that works for QQQ. This other one that I was working on, bruh. So you can see, look at how diametrically different. This one's about to cross 4,000. It's across 4,000. And we have another strategy I created. I was kind of excited about this gap fill one, but like, bruh, struggling. But we have our Momo strategy, our momentum strategy for QQQ. It's at 4,065, and it's not overtrading. Not overtrading at all. It is not overtrading at all, and this is lovely stuff, ladies and gentlemen. Lovely. We're at 4,500. We just crossed 5,000, ladies and gentlemen. We just crossed 6,000. This is the biggest trade I've seen. An $88 trade in 2 minutes, ladies and gentlemen. See, I just took my eye off it for a second. We just crossed 9,000. So let's see what happens, ladies and gentlemen. And y'all seeing this backtest run, a strategy I just created in literally 2 seconds. And one I spent damn near 4 hours, bro, to create. So you see, I'm at 11,000 right now for our momentum strategy, and our gap fill strategy is barely. So I just seen our best trade. I just see, okay, 2 back-to-back best trades, one for 1,200, one for 1,600, another one for 1,800. The strategy's at 16,000. You see this with your own eyes. You saw with your own eyes with what I did, right? So let's see how this worked. 1,900. So let's see how this works. I just seen our best trade, and I think this is warranted for us to have a discussion. I'm trying to do 2 things at once, but yo, this shit is just popping. Where is it? Okay, this was a put. We bought this put for $114, right? We bought 39 contracts. This cost us 4,500, right? In 1 minute, we made $2,700. That's crazy, fam. And again, the strategy, all of our strategies start at $100. You saw that. Bro, you see it right here. How struggling. 6 grand. We just made 6 grand in 9 minutes from the strategy, and it's at 65,000. The strategy's at 66,000, ladies and gentlemen. The strategy's on and popping. All right. She just made $4,000 and it's at 75,000. Like I'm kind of baffled. It just made 8 grand in 9 minutes, right? The strategy's at 87K. The strategy's at 99. The strategy's at 100,000. Y'all seeing this, man? This is the first run. The strategy's at 105,000, ladies and gentlemen, bro. Like we're actually moving and shaking over here. Like I can't believe this. We have one strategy that is barely moving. Strategy's at 111,000. Strategy's at 117,000. And this strategy, 126,000, bro. And y'all just seen how I made this in fucking under 5 minutes, man. This is crazy. 132,000. And we have one strategy that is barely able to perform. But I have another one that I made in under 15 minutes here live with you all because I was getting pissed off about this gap fill one. I thought this gap fill one had potential to go, but it's not. Right. And I think one thing that I've learned here is that we need to learn when to let strategies go. This gap fill one, I need to let go. We're going to focus on this momentum strategy that's like obviously saying that, hey, you should have paid attention to me. And you saw where I got the strategy from, bruh. You saw where I got the strategy from. I pulled it from here. And this is our sheet. And if you all want this, I can give you a copy of this, but I need 10 people to go ahead and like this video. Once it's at 148, that's at 157,000. Once I get 10 people to like this video, I will share this with you all so you can pull and do what I've done, and also share the prompt with you, 173,000. So I grabbed this strategy, right? And then I went to Claude Code, right? First, I was like, all right, I want to try this gap fill for SPY, right? Then I was like, you know what? That may not be the vibe, right? So then I was like, all right, let's do this momentum gang. So we turned our momentum strategy. We made that live here with you all, right? Here are the parameters for it. And now the backtest is running. And the backtest, it may cross 200,000. And if it does, that'll be the highest amount I've ever seen. This is at 184,000, starting at 100,000, starting at $100, bro. Like this is just beyond baffling. We just made $10,000. The strategy just made 10 grand like it was nothing. Like I'm baffled right now, and I may be talking a lot. I ain't talking fast, but you listening slow. Check me out. 82% win rate? That's ridiculous. Sharp over 1%. Max drawdown is 12%. So at one point in time, the strategy lost, what was it at? $88, right? Then it was able to rally to 194,000. You gotta be fucking kidding me, bro. 110 trades. 8 out of every 10 trade we won. The best trade. Best trade was 10,000. Worst trade was 4,000. Average trade 1,700. Average hold time was 6 minutes. Average ROI 137%. Profit factor is 7. That's the highest I've ever seen. 7.76, meaning for every dollar we put out, we're getting $7 back. This is ridiculous, ladies and gentlemen. We may have found something. We may have fell forward on some type shit. All right, let's get our back test. We may have found some gold, bruh. We may have found some gold. We may have found some gold, bruh. Review, and let's discuss objectively. All right, I just had to do something real quick because I just wanted to check like one thing that my data wasn't tripping. That like I wasn't seeing some like dumb shit. Um, all right, red flags. Starting, bruh, he's even trip. Starting capital of $100 and then ending balance of 194,909,090 cents. Right, 194,000% return, 82% win rate, 91 out of 110. Total trades is 110. Red flags, what to question. What is almost certain is that the curve fitting or overly optimistic. 194,000% return in 1 year is not realistic for live trading. Strategy was tested on the same data used to develop it. Um, Not out of sample testing. Parameter threshold likely optimized for 2024. When you live trade this in 2025, expect significant worse results. Typical degradation around 50 to 70%. Exponential growth is dangerous. The 100 to 3,400 most growth. The 34 to 23,000 is explosive, and then the parabolic, that means that shit was crazy, bruh. From 23,000 to 194. The strategy compounds 100 contracts by end of the year. You're risking 10,000 to 15,000 per trade, bruh. By December, one bad streak in the high volatility environment equals account blown. You had three consecutive losses. What if you hit five or six? The drawdown analysis reveals the fragility, but the drawdown was 12%. Right. What happened was the account was at 23,000, lost 2,900 in one drawdown period, two stop loss hits back to back. The September drawdown was the 12%. Another three stop loss cluster. What this tells us, when volatility spikes greater than 30, the breakouts become fake outs. Strategy gets choppy and ends up in whipsaw markets. The max drawdown is misleading small accounts because the account grew fast. The exit reason was the TP2, right? 55%. And then the stop time was 39. And then stop loss. TP2 is doing all the heavy lifting, 94% of the total profits. The time stop are coin flips, some losers, some winners, many break evens. Stop loss never wins. Every single trade is a loser. What this suggests, when momentum works, it works fast. Hits TP2 in less than 5 minutes. When it fails, you bleed over 10 minutes or it hits a stop. Risk reward is actually worse than it appears. Really. High trade frequency. October was 13, 20, 13. What worked? Lots of intraday momentum. VIX was elevated but not extreme. The 3 minute breakout captured the real moves, and you wanted to use 15. The medium hold time. Medium hold time was 7 minutes. This is a 75 percentile, a 10-minute max. Most TP2s hit within the 2 to 6 minutes. You didn't hit TP2 by 6 minutes. You usually timed out a break even or small gain. This validates the 10-minute max hold time. The position size scaled appropriately. The major concerns for okay, bruh. Um, let's update so we can run on 23. Oh, I forgot. I forgot I can't do that because of the other one. Um, create a backtest results folder. Then create subfolders with 2024, 2023, and 2022 folders within them. Then create subfolders within the years for V1 baseline. Then once those are created, move 2024 V1 baseline here into that folder. I said move, do not copy. All right, now let me go run 2023. I forgot you could just do that. Okay. Python, Momo, baby, bt.py 2023. Boom. 2023. Perfect. Perfect. We have our data. All right, so I'm gonna let this load. Bro, I don't even want to look. It's still bullshitting. All right, where are we? Where are we? Where are we? We have our gamer baby. Um, so I'm not tripping, right? So I'm not tripping. So I'm not tripping because I did not expect this. I know I'm shocked too. V2 backtest 2023 baseline. All right. So while that's running, let me go grab me some agua. I walked out for water. I was back gone for like maybe 2 minutes. The strategy's at 3,500 already. We may have found something. We may have failed forward, ladies and gentlemen. I'm going to let this load. I'm just going to shut up and let it load and just let it run. I'm just going to shut up and let it run. Strategy's at 27,000. I know I said I wasn't gonna say nothing, but bruh. Again, we may have fell for it. Strategy's at 31. It's oscillating back and forth between 31 and 29,000, right? So we may have found something, ladies and gentlemen. Again, I'm just gonna shut up and let y'all just see this. I just you saw the biggest trade right now, 4,000. The biggest trade I've seen so far, 4,000. Let me just look at it real quick. It was a call 358 strike. We bought it at 86, and then we bought it at $86. We sold it at 114. We made 4,000. This is crazy, ladies and gentlemen. This is crazy. The strategy's at 69,000. The strategy's at 60,000, 68,000. The strategy's at 70,000, ladies and gentlemen. We made $8,000. We just made an $8,000 trade. And that's kind of like serendipitous, if you would. 8,000 in 8 minutes, almost 1,000 a minute. We got in at 121, and then we sold at 200. We made 70%. Oh, okay, around 69%. TP2 hit. Strategy's going crazy, ladies and gentlemen. It's at 99. Is it going to hit 100? Okay, I'm just going to shut up. Strategy hit 100,000. All right, I'm just going to shut up. Y'all going to see this. And you got the ball back. All right, let's look at this real quick. So this is 2023. We ended at 118,000, ladies and gentlemen. We peaked at 118,000, and that's where we ended. The Sharp ratio is 0.73, so it's a little bit less than 2024. We have 72% win rate. Our drawdown is 26. We mean at one point in time, the strategy went from $100 to what is that? 84, $83, right? Oh, excuse me, 73, $73. Profit factor is a lot better than what it was for 2020. Remember 2024 was like 7.97. Here's 10. Remembering for every dollar that we put out, we're making $10. It's fucking crazy. We may have failed forward and found a secret weapon, ladies and gentlemen. We may have fell forward and found a secret weapon that I wasn't even trying to do, but we did, and I'm glad. I'm glad y'all was able to see that. I'm glad that y'all was able to see that. Review and let's discuss. Yeah, I'm done with this strategy. What about you? I'm done. I'm done with this strategy. What about you? What about you? Bruh, you see 0% win rate, 5 trades. Yeah, we can go ahead and boot this strategy. We can go ahead and boot this strategy and be like, all right, you're not it. You are not it, and that is fine. Um, 2024 results are here. We moved them. What am I looking for? Final number. Boom. That's crazy. That's crazy. Shocking. I know. We may have found something, ladies and gentlemen. Excuse me. We may have found something. Again, this is really, I feel like we fell forward with this one. Because I was kind of like, damn, this isn't looking good at all for my little gap fill strategy that I was trying to do. Then I was like, all right, you know what? Let me go try this momentum, baby. And then I took this momentum strategy that we created earlier, not created, but like we got the idea from ChatGPT, and then we created it with Claude Code, and then this strategy was able to turn um, basically a bad day. I ain't gonna hold you into a phenomenal, outstanding, uh, excellent day. And I'm going to create. I'm not going nowhere until we finish this up. Um, let's see. Let's see. Hold on. All right. So 2024, I don't care about, I mean, I get it, but these are two different years. The win rates are above 65%. We are above 100 trades. The average trade is above $500. Max drawdown is below 25. Max consecutive losses were 3. Worst single loss, we have 1,800. Then we have 4,000. That's crazy. The one that we made, but I guess because we're betting like 10 to 15 grand per pop. Why 2023 was much rougher. The 22.33 drawdown on trade 4 on August 6th. Okay, the account dropped from 126 to 98 within the first week. If the user was paper trading and saw this, they probably quit. That's why we take the emotions out of this, right? That's why we have an algorithm to be able to do this. Algorithms don't have emotions, they have rules, right? And we're giving it rules such that we're comfortable with and we're able to actually trade it. Right. So you all are just seeing my process. Again, some are going to be winners, some are going to be losers. We obviously had a little the stinker over here, right? But look what we have here, right? We actually have a winner right here, and it's producing phenomenal work. More losses, more lower quality, 36 losing trades, right? Versus the 19. Same years show the same pattern. The time stops or a coin flip, right? When TP2 doesn't hit fast, you grind sideways. So 2024 had better stop performances, right? But still not as good as the TP 100% win rate across both years, right? 100% win rate, 100% win rate. So that 55% is where it's at. The TP won every single time, 100% win rate across 106 trades. When momentum works, it hits 55% fast. When it doesn't, you either time out or stop out. October effect, both years, 17 trades, 60,000. Account went from 30,000 and 95,000 in 1 month. Account went from 62,000 to 126,000 in 1 month. Why? Post summer volatility spikes, earning season momentum. That's why I really want to finish this so I can get this baby in the market before like it really start popping. VXM was in a sweet spot. 2023 teaches us that one early account risk. First 10 trades, only 45 profit, 4.5% return. Hit a negative 22% drawdown on trade number 4. If starting with $1,000 instead of 100, many would have quit. Why this matters: backtest survived because you account was only $100. With real money, I'm only starting with $100. Like, this is, I'm not starting with 5,000 or 10,000. That's crazy. If we backtested at 100, why am I going to give it more? Problem two was 2023 had worse market conditions, but it still finished above 100,000, starting at 100. Banking crisis. The Silicon Valley Bank collapsed back in March. Fed hiking spike, choppy whipsaw markets equals more stop losses. 2024 was a smoother uptrend year. Right. Conclusion: performs better in a trending market, but struggles in a choppy, uncertain market, but still finished above 100,000. What happened? Account peaked at 126, trade number three. Next call was a 265 stop loss hit, lost $28, balance dropped to 98. Still in a small account, less than 500, risking 90%. One bad stop loss is a 22% hit, no buffer, no margin for error. We're gonna fix that. Consistent, no regime filter strategy, doesn't adapt to the market conditions. What doesn't work is the never hit. Okay, stop losses are brutal. Time stops are mediocre, and then so the 88% never hit. So we do need to lower that. What if I go from like 55, or what if I go from like 55.70? Let's see 55.70. Tighten the stop loss. 25 is too wide. So we can go to 20. I love that. We can tighten a little bit so I can see. Um, so let me test. So let me test on 2020. I'm going to test on 2022 first before I even touch anything, because I want to create a true baseline. Now move 2023 baseline into the folder. All right, let's get this one running. Python, Momo, baby, bt.py 2022. 2022. All right, perfect. So now we are running V3 backtest 2022 baseline, new high. All right. Perfect, perfect, perfect. I think I'm gonna be here for like another hour or so. We're running, bro. We're running. Y'all getting great content today. I know it took me a while to be able to get to this point, but nonetheless, y'all getting great content, man. Y'all are getting great content. Strategy in 2026. Let's try that one. All right, our back test. Oh, it's running. It's running. Our back test is running. My fault. Okay. This is a bear market. Remember, bear down. We think we are bearish on the market. So the strategy is having just a little bit of performance issues. Is at $83. The first trade I don't think was profitable, but nonetheless, we're still going to run. We are still going to run. We are still running, and I'm waiting to see how well it performs. Okay, so just caught it 80 cents move, but it caught it at the bear end. It timed out. All right, just caught another trade, but lost $23. We are running this back test on 2024 and we're finishing out and we're going to see how it works here. Oh. All right, here we go. We're running our back. I'm just waiting for it to load, and as soon as it loads, it's going to take off and run. I just want to make sure it's not blurry. If you all are having trouble seeing this, please let me know. And again, what we've changed here is we made the stop loss a little tighter. So instead of the 25, we're at 20, and we dropped the TP levels, the take profit levels, from 88 to 68. So let's gauge and see how well this works. And what does a backtest do? The backtest is running. And again, you see that starting balance is $100. Right? So you see that. It ain't no Capiana. Wait. That's wrong. It's 88%. Wait, it's hitting 88%? That doesn't make sense. TP. Okay. Okay, hold on. Hold on. Something doesn't make sense. Something doesn't make sense. Review and make sure we updated the TP1 levels. Does not seem like that when we just ran backtest. Yeah, there seems like you're right. The code still says TP1 88%. Found it. Okay. All right. Double check before we run it again. While we're doing that, because I know it's good, Python momo baby bt.py 2024. All right, that's running. We running our back test, baby. I wish it was version. I mean, kind of is, because those others were baseline, but I'm still considered a version, right? Because it's still a baseline. All right, we're good. We're good. All right, let's run our back test, baby. Let's run our back test. This is probably going to be the longest video that I stream, but this is probably going to be one of the most worthwhile videos. So whomever is watching this, like, you all are getting a lot of great info here. And if you do have any questions while I'm here live, don't be afraid to shoot out a question. Don't be afraid. There's no dumb question. I'm here to help as best I can. I had a lot of great work to be able to get done today, and I'm glad that you all are able to see this process. We went from a shite strategy, right, to a strategy that's actually producing something. I ain't gonna hold you. I am not gonna hold you. This baby is running, and now I'm just interested to see what it's gonna do and how it's gonna perform, based on what we need here. So this is amazing, friend. This is amazing. If you all do have any questions along this process while we're waiting for the backtest to run, let me know. Let me know. And yeah, man, we're running. Oh, that's why. Oh, you see it. There it is. Strategies at 7,200, ladies and gentlemen. Just crossed 8,000. And again, only thing we changed was at the take profit levels, and I made these stop loss a lot tighter, a little tighter. All right, we just crossed 10,000. Remember, October was our best month. Let's see if it holds still. Let's see if it holds still. We're at 20K. Just crossed 23. Best trade I've seen so far was 2,300. Worst trade I've seen so far, we just lost 1,700. Best trade I've seen so far is 2,800. Right now we're at 29,000. Best trade I've seen so far is 4,000. Okay, 3,000 and 4,000. 4,900. Strategy right now is at 42, 44,000. Is this October? This must be October. This got to be October. Strategy's at 55. This is October. This is August. It's not even October yet. Strategy right now 65,000. This is August. It's popping like this. It's at 60,000, 68,000. And again, we just updated two things. We just updated two things. Oh, we ain't even touched October yet, and we at 68K. We ain't even touched October yet, and we're at 68 grand, fam. All right, we're in October. We just made 8,000 jumping in October. We're at, okay, October, okay. At 100K, the 7th day of October, bro. October. Yeah, so I'm kind of mad I ain't finished these in October. That's what I was trying to get out as many freaking bots as possible in October. So by the time November comes around, like we're paper testing and like we got a lot that's going to be paper testing this month. So like I'm excited for y'all to see this. And most of them are going to be these momentum breakout strategy. Not all of them are going to be QQQ. I have some SPY. And like I want to create one for NVIDIA, but I don't know. The reason I chose NVIDIA is because 5 trillion market cap. Yeah, that puts you up there. And it's highly liquid, meaning that there's always somebody willing to buy and willing to sell options. So that's what we look for, right? And we want to see if we can be able to do this with $100. So I'm interested. I'm interested to see how this is going to work. And I'm also interested, should I just add, no, I'm not going to add, because I can add machine learning to this, right? We can add a profitability of profit machine learning to this using Colab. Should I do that? Maybe I'll do that tomorrow. But today I'm just focused on being able to create this strategy and finish it up. It's at 175,000. I'm interested to see if it's going to cross 200. And again, this is just baffling to me that we created a strategy that starts at $100 and is able to compound and get well over 175K. We're in December right now. It's 178,000. So let's see where it goes. 185. $185, fam. 195. Just made $10,000 in one trade. That 10K. Let's go look at it. $10,000 in 2 minutes. All legal. A put 519. We bought it at 146. We sold it at 245. TP1. Where did it peak? 197. We closed where we peaked. All right. So hold on. Let me get my results. So boom. Now I'm gonna leave 20. I'm gonna leave this out here. So when I need to copy it over, it's just already there, right? Boom. Now let's run Python Momo baby bt.py 2023. All right, just check. Yep, we're running on 2023. I think it was 190 something. I have it. Hold on. Matter of fact, let me just paste it. There you go. Let me paste it so you can see it. Boom. I know. Shocking. I know. Shocking. I know. I'm curious. I'm learning a lot, like just being able to go through one another strategy and another strategy, right? Like I'm learning because our previous strategies, I still do this tiered type of take profit. So this right here is it new, but what the new thing is like there's no time limit. It isn't looking for the first 5 minutes, 68%, the first whatever, 55% or the stop loss, right? It's whatever comes first, and I like that a little bit better versus how we're doing it. Right. So we just may implement that moving forward for our future strategies. Right. We may just implement that for our future strategies. All right. We're at 120. So I'm just going to let this thing run. I'm not going to talk too much. I'm going to let it run. It's April. The strategy's at 2,500. I know I said I wasn't going to talk too much, but I just wanted to give that little April update. That it's April. We're at 3,300. All right. I'm going to shut up and just let it Strategies at 8,000. The best trade I've seen so far was that 1,000 trade that just passed. Strategy right now is at 8,000, ladies and gentlemen. Strategy is making its way to being able to be a beast. And again, this is one of those ones we fell forward and we found something that hit when this wasn't the main goal. The main goal was the gap fill strategy, but we found one that's actually like producing better. 1,600, 1,200 strategies at 13,000, and it's July. Again, all of our strategies start at $100 unless I tell you otherwise. You can take that to the bank that all of them start at $100 and they're going to perform because we put them through rigorous back testing, right? 2,000. Best trade I've seen so far. This is crazy. This is crazy, ladies and gentlemen. Another 2,000 trade. Strategy's at 21,000 right now. 23,000. Another 2,000 trade. We're in August. We're not even in our best months, quote unquote, is September or October. I'm tripping. Strategy right now is lit. $3,000 best trade. 26,000. So I'm just gonna let this run. I'm gonna shut up. I'm gonna let this run. So we are in, I believe we're in August right now. Strategy just touched 51,000. Again, the only thing's just $5,000 trade that I seen. It took 7 minutes. That was crazy. Again, we didn't update too much. The only thing that we've updated, 64,000. The only thing that we updated was the stop loss. I updated the stop loss from 8,000, $8,000 trade. Right. Updated the stop loss from 0.25, so 25% to 20%, right? And then we added or we modified, excuse me, the take profit levels. So we moved the take profit one level from 88% take profit, meaning that we want to take profit as soon as it touches 88% return, and then we drop that down to 68%. We're still catching 80s, we're still catching 70s, right? So we're still catching take profits that are above the 68%. But what this allows us to do is to be able to have that nice little cushion between, right? So we can go up to 53 and then up to 68, right? And a little bit, excuse me, a little bit higher than that. So whatever pops, first the strategy just crossed 100,000. That's how, so both years are consistent over 100,000 from starting with $100. That's crazy, ain't it? And these are our momentum strategies that we created here with you all live. That I was starting with a gap fill strategy, right? So I'm not going to hold you. I was like, I'm almost going to end this and say, you know what, this stream ain't working. But then that just shows you dividend that if you stay consistent with a thing, right? And if you're able to pivot from that thing as well, look what you could get it. So the back test just finished for 2023. Again, starting at $100, it finished at $113,722.85. The win rate was 71%. Sharp ratio is just below the what we want. I mean, 1.75 and higher, but this right here is not that bad. Best trade was 8,000. Worst trade was 1,400. The profit factor is still beast, meaning for every dollar we put out, we're getting almost 11 back. This is phenomenal, ladies and gentlemen. review, and let's discuss. I think, yeah, I'm ready just to create the bot at this point. Yeah, we ready to create the bot, bruh. Like, I don't need to keep tweaking. I don't need to keep, oh, let me do this, let me do that. Nope. I'm ready for the bot. What about you? Ready for the bot? 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 Yeah, we ready for the bot. All right. And the bot is the creating the bot is going to be a lot easier. I'm not going to hold you because I already have a framework for it. Because this is not my first time creating one. Here is Sniper. And then boom. Dur. Okay. Viable profit target. Viable. Before, now we got both TP targets hidden. Exit performance. TP1, TP2, average, stop loss, time stop, or I said that backwards. Damn. You want me to create the market regime indicator script? Additional requirements: the market regime indicator script, a separate file. Run the indicator before trading. If market is bear mode, skip. If market is bull mode, trade. Before we create that, I need you. Come on over. Boom. V2 2023 SL and TP changes. V2 2024 SL and TP changes. Let's move them accordingly to their folders. Boom. What else do I need? I need to bring you over. Boom. Do I have everything now? We have the configs. All right, perfect. The bot, we have everything we need. Oh, do I need? Yeah, let me just bring you over. You need alpaca, IBKR, alerts. I kind of want to, I may want to, I'm probably going to, I'm probably going to, before we create the market regime indicator script, review. And it's going to compact. I know that. Review the reference bots that we are going to use as a example to create the ones we need for this current strategy. Then let's discuss the plan to get it done. We are ready for the bot. Momo baby. Momo baby bot.py. Ready for the bot, baby. I was watching Western Michigan and Central Michigan. That means you really gotta love football. Like really, really gotta love football. Central Michigan. Oh, he almost. Yeah, there go the flag. That's a running back, ladies and gentlemen. Ba-dum, ba-dum, bum. Ba-dum, ba-dum, bum. Ba-dum, ba-dum, bum. Trade, okay. You got everything I need. Perfect. Plus that bot. It's a VXN bot. Or excuse me, it's a QQQ bot anyway. So it gives everything we need to be able to get this done for this particular. All right. Beautiful. I should have gave you IBKR. Oh, but it has the limit order information, so you should be able to see that. And now we're going to create our bot, ladies and gentlemen. Yo, we went from idea, backtest. We kind of fumbled a little bit. I'm not going to hold you. Now we are going to have our bot. I'm fired up. I'm fired up. All right. Q5 bar breakout with time-based exits. Ours is not like that. All strategy parameters are centralized. Trading paper, VXN, time-based exit, unique to sniper, risk, okay, position, okay, plan for momentum, OTM scrapper, okay, 3 minute, price threshold, none, pure price action. Next 1 minute candle. VIX range is a little bit wider. Delta range, no premium filter, no strike filter. 68, 55, TP3, none. 20, 10, okay. Remember it's 932 because I thought it was going to be gap fill, but whatever. Update, oh, okay. All right. What I want to do is make sure, hold on. And I'm pretty certain. Okay, this has what we need for the limit orders. All right. Read so you can understand how we are using IBKR. Then once you get it, let's proceed to get this done. After each file is created, quickly test to make sure ready for production. No mocks, no fallbacks, no placeholders. Um, all real implementations here. All right, we're finishing up our bot, man. We are like another 10 or 15 minutes, this bot will be done, and then I'm gonna call it a wrap for today. Like we have been through the ringer today, ladies and gentlemen. We have done a lot of great work. We were able 6 hours, bro. This is the longest I've ever streamed. I'm not gonna hold you. 6 hour stream is kind of crazy. But you all we're able to see the entire process, man. Limit orders using theta data for pricing, no IBKI market data. Subscription needed. Let's build the production ready. Okay. Beautiful. Momo configurations. Starting balance is 100 for live trading. Okay. Beautiful. Beautiful. TP ranges. I told you to test after each file, and I don't think that's what you're doing. Momo positions. We have Momo positions, which just all right. Before we move forward, just proceed to quickly test what was completed via QA test via terminal commands to ensure good and ready. Then, once confirmed, proceed to next. Who's playing this Thursday? Oh, I don't know. The Broncos and the Raiders. I don't know. Me, I don't know. Doo-doo. That's what I'm screaming. I mean, you all y'all see the bot doesn't take too much, right? The bot is more so like one, two, three. Like the longest part of this process is the strategy itself, like being able to back test it and then coming up with it. But I'm glad you all will be able to see it. Like another 5 minutes or so, we'll be done with this bot, done with the strategy, and then on Monday, I'm going to paper test this. Now, because you all have gone with me through the grinder, I'm going to come here first. Usually, I go over to Twitch, right? Because I stream on Twitch as well. Whenever some of my coding sessions over there. So, all right, proceed. But I'm gonna be here as well. So I'm gonna be showing y'all love. Don't get me wrong, because I don't know if this would have been as smooth on Twitch as it is here. So I appreciate these. Pitt is just putting it to Stanford right now. All right, we're creating our Momo bot, and then our momentum. And then once this is done, I'm going to test it. Then once I test it, we are going to the old ball coach coached Georgia. That's one of those weird ones. I did not know Steve Spurrier coached at Georgia. Here we go. We're just writing the code. We're having Cloud Code writing this up for us. And as soon as it's written, we'll be able to test it, validate it, and then push it through. I really need Cal to win today. If I can get Cal to win today, then that'll be great to take out Virginia to help out Miami. All right, all right. We're almost there. I know you're getting antsy. I kind of am too. As soon as we hit it, here's an example of one of our AI agents. What I'm going to do, I need to open up a new window, and then let me do this. View bigger. You should be able to see this. Just give 2 seconds. I just want to make sure there's no issues when I start using it. I'm going to make it like super. All right, so you see that. All right, what I need to do now, I need to go inside the folder. Right now it's just in the terminal. Now I need to actually go inside that folder. And this lets me go inside the folder. That's crazy. That is called gap. You see, because I was going to do a gap fill for spy, then we ran into this. So now let me get the conda environment. Let's go ahead and install everything we need in that conda environment. Perfect. Now let's go ahead and test our data is running. Beautiful. And let's make sure. All right, beautiful. Now I'm just waiting for the bot. As soon as we have the bot, I can test it. We're ready, fam. All right, it's creating the Momo bot, and I'm waiting for this to finish up. Taking a little bit longer than I anticipated, but hey, that's okay. All right, we have it. Python. Hybrid tracker. Oh. You need, hold on. Hold on. Copy. Okay, boom. Review and let's fix issue. Python momo underscore bot.py. Dun, 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 dun. Oh, because I need to run IBKR. Hold on. Give me 1 second. I need to get IBKR up. That makes sense. That makes sense. But our bot, we're almost here. We're almost here. All right. Yep. Okay. Now IBKR is up. Now that IBKR is up, let's test our bot. Come on. Thank you. Bro, where did you go? Oh. Let's test our bot. Our bot is up. We have created our bot, ladies and gentlemen. This is super fire. It's able to detect if the market is open. It says that's wait till the market is open. It's able to get the IBKR connection, alpaca. It's able to get the VXN. Data is online. It has its account balance. This bot is ready for paper testing, ladies and gentlemen. And I'm going to be running this live on Monday. So you're able to see everything, man. You're able to see us go from the idea. You're able to see us go to the back testing. You're able to see us go to actually creating the bot, and the bot is here. It's working. It's ready to be able to be back tested. So on Monday, don't forget to tune in. Don't forget to subscribe. Don't forget to like. We will be here back testing all of our bots that we created. I appreciate you all's patience that you saw the entire process from start to finish. It's your boy Creative. Say it with me. We created something great. Now I'm going to